members. Welcome to the program on Revisit of Income Tax Act. Today with us we have A.M. Sundara Rao P. May I request Radhakrishnan sir to escort A.M. Sundara Rao onto the dais. And welcome him with the floral bouquet. A.M. Sundar Rao P. is a member of the ICI, is currently employed with Messrs. Manohar Rao, Manohar Chaudhary and Associates, a prominent CA firm with 26 partners and 16 offices across India. With over 4 years of experience, A.M. Sundar has developed specific expertise in direct and international taxation. At a young age, he had the opportunity to represent clients before various authorities, handling issues related to assessment, appeals, prosecution, and other direct taxes matters. Additionally, he has also represented clients in cases before Honorable ITAT. His experience encompasses a wide array of tax-related domains, including business structuring, advisory services, and other related fields. Additionally, he has contributed articles to various publications, sharing his insights and knowledge in the field of taxation. Recently, he has completed the Diploma in International Taxation from ICI. A.M. Sundar currently holds the position of Lead Tax Dispute Resolution at Manohar Chaudhary and Associates. He has been in the firm since his articleship days. With this brief introduction, I welcome you. Over to you.
Happy morning, everyone. It is always good to be back with some kind of sessions at Mother Glory. It is always a privilege for me also to have it here. First of all, congratulations and thanks to the ICA for bringing out the sessions like this, revisit to the income tax. In our profession, we need to revisit some of the things which otherwise the profession, it tells everyone to go back and read whatever is there and whatever the amendments are being there. With this concept, the revisit income tax which they come up with, I think now we are at the last leg, which is the last day of it. When this, when they have given me the topics, at that time also I was left with 3-4 topics which I need to choose the topics which I have chosen the penalty and prosecution. If you see this penalty and prosecution, it will, on face of it, if you see, it will be starts with 270A to 270D, 280D, which if you feel that there is only 10 sections which you need to cover, but actually if you see the chapters in that, each chapter will have 30 to 40 sections under subsections. Like how we study in at school time, would have studied A, B, C, D alphabetics. But in the income tax, you know, you will have A, AAB, AAC, AAD, like that, so on and so forth. That's how now the environment has been changed. You need to be compliant with all the rules and regulations, either Income Tax Act or every other act. If you don't comply, what will happen is what is all about why these sections are there, all these were there is the question. Some person in US, he has mentioned saying that compliances is costly, but try not doing compliances. What will happen? It will be fatal. We have come across last March. I think everyone knows that we had a busy season of assessments, reassessment, all those things. Surprisingly, this year we had more of prosecution cases to deal with. One of the cases I wanted to put before you, why prosecution was there in one of the cases. I'll tell you a simple story. There was a person, family-run business. It is a company. He was running the business very successfully from last 20 to 30 years. Now the second generation, the children have come into picture. They have taken it over. the father has given the liberty to take decisions to his children. And there was one chartered accountant who was there with them from past 10 to 15 years. What has actually happened is when these payment cycles are there were some payments put before him. There are payments of TDS, there are payments of the work people, and there are so many payments put before him. What the children has done is, okay, anyways the income tax department payments, no, we'll give it some time. Whenever the funds are there, we will pay them. After some point of time, what actually happened is it was a delay of TDS remittance. As you know, the department was not silent these days. They have been initiated prosecution against them. Now ball has been with the father how to deal with all those things. This is one of the example. When you have compliances in income tax, if you don't follow, how long it will take you up. Again, it is a situation where the department, the Income Tax Act was made in such a way that there are so many provisions which the department is still not looking into. Even, for example, our CS, if you see whoever qualified, they would have not come across penalty and prosecution because it would have been not in their academics, or the importance of penalties and prosecution in academics, it is very less, considered 5 marks, that's it. And in the practice field also, same way, most of the CAs would be dealing with income tax filings, normal filings, but they would have not come across these penalties and prosecution provisions. One of the reason might be they might not be in the litigation practice. That is also one reason. That is why it is very important for every one of us to educate the client what are the provisions are there. Even, for example, I think so if you have seen the newspapers from last 2 months back, one female who has a 2 crore income, she has not filed the income tax return. There was a prosecution launched on her. She has paid the taxes after that, but it doesn't sway away from the prosecution proceedings. This is one of the so many examples like this. This is why we need to educate the client. As a profession, we are in chartered accountants profession. It is our duty to educate them, and then we need to tell them these are the consequences are there if you are not complying with any of the provisions. With this introduction, I think so we'll start with the penalties. The penalties, the first section, some of the sections I will cover the important sections, the other sections we will run through because it needs too much time to go through every section. Some of the important sections we will go through it. The first section which I will try to cover is section 270A. 270A talks about penalty for underreporting and misreporting. Till assessment year 17-18 there was a section called 271 which talks about concealment in income. Now the section is not there, it was replaced by the 270A. Now for the current assessment year also, this is the section which will cover. Who can levy penalty under 270A? The assessing officer during the course of assessment proceedings, the CAT appeals during the course of the appellate proceedings, and the principal commissioner in their revision 263 or 264, they can levy this penalty. There are basically 2 different types of underreporting is there in this section. Why this difference is there, we'll come to know that after we go through some of the slides. Basically there are 2 things are there. One is underreporting income, and there is a underreporting in consequences of misreporting. Both are under the same section, underreporting, but underreporting there are 2 differences there. Why such difference is there, we will come across. What is the meaning of underreporting income? If you have seen so many sections in the income tax, whenever there is a definition needs to be given, they will explain it clearly, mentioning what is this, what is the meaning of the underreporting. But if you come across this section, you will find little math in it. They have linked mathematics to this section. You will see subclause 3, subclause 4, subclause 5 and the tax payable, everything. You will feel like all are similar sections on subsections only. They brought little bit math in it. For a simple meaning, what is, in a layman's meaning, what is underreported income? Suppose you have declared some income in your return of income. After that, in your assessment proceedings or anywhere in the proceedings in the Income Tax Act, there was some addition to it. That difference we call it as an underreporting in income. If you have declared some X amount and there is an assessment happened, there is some addition 2x. 2x minus x is called as an underreported income. That is the simple logic. But there are so many proceedings under the Income Tax Act, that is why they need to bring this definition to show what is under each situation, what would be the underreporting income. Coming to the first point, in case of normal income, if there was a return of income is filed and there is a processing of the return of income is done, difference between the income assessed and intimation passed under section 143(1)(a) is considered as an underreporting income. Suppose there is a reassessment under 148, before there is an assessment happened, difference between the reassessment and the assessment is considered as an underreported income. Suppose if there is no return itself is filed and you have filed first time in response to the notice under section 148, the difference between the income assessed minus the basic exemption limit is considered as an underreported income. You need to focus on one of the important sections. I think throughout the sessions I will be discussing some of the provisions which still now that is a debatable issue, so I will leave it to you to take it home and decide, discuss and put some thought on it whether it is correct or not. Suppose if you see the first thing, they are mentioning the difference between the income assessment minus deduction 143(1)(a). Suppose if the return of income is not processed under 143(1), the section itself is not providing that. In that time, what will happen? Because the section itself is not providing whether underreported income will come into picture or not. That is one question which is left. We need to talk. And in the same way, if there is an income assessed under section 115 JB and JC, there also whatever the additional income is declared, that difference will be considered as an underreporting income. Suppose there is a loss. Because of an assessment, there is a decrease in the loss. To whatever extent that loss is decreased, that will be also considered as an underreported income. Just because there is no tax payable coming on that, you can't take a view that there is no underreported income. Even there is a reduction in the loss, it will be considered as an underreported income. The same section, subsection 3 says how to calculate underreported income. It is the same assessed income minus income determined under 143(1)(a). And in case of company, because you don't have the basic exemption limit, you will take it as a total minus assessed income. But other than the company, you have some wherever the basic exemption limit is there, you will consider that benefit to deduct from the income assessed. Now we have understood there is an underreported income. How to calculate underreported income? Is that every addition whatever is made in the assessment order, will it be considered as an underreported income? In the sections, there are some exclusions which was given in the underreported income. In these cases, if you are falling under this clause, whatever the underreported income is there, it will not be included as an underreported income. What are the exclusions are there? If the assessee provides a satisfactory explanation which the assessing officer deems fit, it is a bona fide explanation. So you have missed out an income which is a bona fide, which is not intentional or anything, that will not be considered. That too, satisfaction of the EO is required. The second thing, you have estimated some income. You don't have any other means to estimate that income. Other than that, you don't have any other means to estimate that income. And that estimation, the assessing officer has increased that estimation. That cannot be considered as an underreporting income because it is solely based on the estimation. It is all subjective. That is why you won't consider that. And that also it is based on the satisfaction of the assessing officer. And the other case is when it comes to the international transaction and specified domestic transactions, when the transfer pricing officers determines arm's length price, the SSC has maintained all the international transaction records, all the documentation as per provided under the Act. Just because the TPO has raised that arm's length price, that cannot be considered as an underreported income if you have specifically provided all the documents, all the explanation before the assessing officer during the proceedings. And then during the such cases, if it is falling under 271 AAB, that will not be considered as here. 271 AAB, we will go through it further and then we will discuss it more. These are the exclusions. Now we have underreported income, there is an exclusions. Now we will go to misreporting. What is this misreporting? For any offense or there will be simply we'll call it, there is some consequences which is serious consequences are there. This is the kind of subsection where these are considered as a serious consequences. That's why it will be called as a misreporting in consequences of underreporting in consequences of misreporting. What and all will be covered under this section? You will find similarities under this section, whatever are there, you will find similarities in other sections as well. Now we will see what is that. The first one is misrepresentation as suppression of facts. It will be considered as a misreporting of income. Second, failure to record investment in books of accounts. This somewhere you can even include with unexplained, you can link it with unexplained investments where 68 to 69 where it will cover. Some of these will reflect it as there is already tax level there, but why it is coming here, we'll go through further and then we'll get to know. Third thing is claim of expenditure not substantiated by any evidence. If you don't have any evidence but you still claimed an expenditure, that will be considered as a misreporting. The fourth one is very important, recording of any false entry in books of accounts. Before this, for all these 6 clauses, whatever is there, the Income Tax Act has not given definitions to any of these 6. It is all interpretation of legislature, how it is to be treated, but there is no definition for all these 6 things. The fourth one is recording of any false entry in books of account. There is a penalty under this section. For the same mistake, there is a penalty under some other section, which we will come across there, and then we will discuss what is the difference between there and here. Fifth, again, failure to record any receipt in books of accounts having bearing on total income. If you have failed to provide any, if you have failed to record any receipt, that will be also considered as a misreporting of income. And if you fail to report any international transaction, that will be considered as a misreporting income. Now we have seen what is underreporting income and then underreporting income in consequences of misreporting. Why the difference is there? The first reason why the difference is there is because the tax or the penalty differs in both consequences. If it is only underreporting income, the penalty will be only 50% of the tax payable. If it is underreporting in consequences of misreporting, the penalty will be 200%. Which is 4 times more than the normal. That is where the total difference. Why some serious offences are considered as 200%. Because if you are falling under that category, you will end up in paying more penalty. 200% means, suppose if there is a tax payable coming 30% and 200% meant almost you are giving whatever the income is there, you are paying it as a tax penalty interest, more than that. How to calculate that? They have given it under this. Again, the calculation will differ. What is difference between income assessed and this thing? Income return into tax rate you multiply, then you get on that penalty amount you apply, 50% or 200%. Now there is when this section is redrafted, there is extra caution which was taken under this section. Suppose there are 2 assessment years are involved. There is an assessment year 21-22, there is an assessment year 2021. There was some income found during the assessment year 2021, but that was not penalized due to so many reasons. You have an income in 2021. In assessment year 21-22, you have found some assets which is coming under the unexplained credit or unexplained investment. The reason explanation given by the SSA is that this investment is made out of the income which is earned in the previous year. But whether the income, whatever is earned in the previous year, whether it was made to penalty or not is the question here. If it was penalty proceedings were not levied in that year and you are giving explanation saying that the telescoping basically, if you are giving the telescoping benefit saying that the income whatever is earned in the previous year is towards earning, making this investment, even then the penalty provisions will come to that extent investment. Now there are some of the decisions are there for this 270A. The first one is voluntary surrender. Suppose during your practice, I think so you'll come across so many assessors saying that I have voluntarily disclosed, whether even then also whether the penalty will come into picture or not. If you have disclosed before the assessing officer has seen it or if he has come to his this thing, that time you can avoid the penalty. But if you are even voluntarily disclosing after the assessing information as the information or during the proceedings of assessment or reassessment, if you are disclosing it, it is still chargeable to the penalty. Penalty provisions can be levied on this. Second thing is no penalty on aggregation. Whether whatever, suppose I have made an income of X and the department has determined saying that 2X. Whatever difference is there, the remaining X, whether it is all subject to addition, all addition subject to penalty, sometimes the question is no. Suppose if you take a situations like 50C, the assessing officer has that to determine the value of the property whenever you are selling the property. If the assessing officer has determined the value of the property, it is not misreporting, it is not even underreporting. He has made his estimates, that addition cannot be brought here. Again, there is a case laws which I have given it here, which you can refer for that. And when this penalty proceedings when this penalty will be levied, what time, whether it is the time of offence or when the assessment proceedings are there, whether the provisions, whatever is there, it will be applicable. All the provisions at whatever the time the penal provisions, whatever the time the income is earned, that time the penal provision should be there, not at the time of assessment proceedings. And one more very important thing is assessment proceedings, penalty proceedings are two different. The assessing officer will determine the income additions, but that should not be the base for the assessing officer who is handling these penalty proceedings. If there are certain things which you can prove before the penalty of proceedings, that can be still be dropped. Assessing officer can draw the information from the assessment proceedings saying that this is the information is there. What is your explanation? It is not the entirely the basis that assessment proceedings. Addition is made, simply you will be penalty on that. Next thing is burden of proof. Who has to prove this? The burden of proof is on the assessee. It is not on the assessing officer. The assessee has to prove, saying that this is not an underreported income. It is based some. If you are falling under the exclusions and all those things, that is the burden of proof will be on the assessee, not on the assessing officer. Whether revision of return during the proceedings of any of the income tax act, if you file the revision of return, whether you will be charged with the penalty or not. If again the same concept, if the assessing officer finds that by any notice and you come to aware that I have the option to file the revised return, I have filed it, no, that cannot be considered as an option there. If you have filed voluntary revision of return of income without the assessing officer knows, that can be considered as a reason. The last thing is no penalty on highly debatable cases. Suppose there is a High Court judgment which is there. Based on the judgment, I have made my return of income. There is no Supreme Court ruling on that, and there are two High Court judgments which are conflicted on the same decisions. I have taken the decision which is favor to me. On that basis also the penalty cannot be levied, because the law of land for me still is High Court, because the Supreme Court not decided based on the case. I can still take that contention and I can take that. This thing. Now the one more important difference between the underreporting and underreporting in consequence of misreporting is for the immunity from the penalty. Suppose there is a penalty already levied under section 270A. What are the consequences? What will happen? You have an option to ask for immunity under section 270A. But what are the conditions are there? The first condition is you should not file any appeal against the assessment order which is passed, which is subject to the penalty. The second thing is you need to pay the full tax as mentioned in under section 156 notice. The tax, interest, everything you need to pay, and then within 1 month from the end of the order in which month you receive, from that 1 month you need to file the form 68 you need to file to get immunity. But the very important provision is this immunity will cover only underreporting. It will not cover underreporting in consequence of misreporting. That is very important. Now there are some practical issues which are there under this section. Suppose if you see, there is an assessment order. There are 3-4 additions are made in that assessment order. You will have a mix of additions. One, underreporting income also you will have, and then you will have underreporting in consequence of misreporting. Then that time, what assessor has to do? Whether he can go for filing of this, or Because misreporting is there, he might think that I am not eligible to apply immunity under this section. He should be quiet. The best part is to file, because the assessing officer has to decide whenever you file an application, within 1 month from the end of the month in which the application is filed, he has to decide that whether he is accepting that application or rejecting that application. Let the ball be in the assessing officer's hand, whether to reject that application, whether to accept that application. Or he can, bestly what he can do is he will immunity from the under-reporting. From misreporting, he can still levy the penalty. One more thing is, I think so, if you have come across so many assessment proceedings recently, the most practical issue what is happening now is, because of the shift in the income tax department software, before it was TCS, now it is Infosys, I guess. Whenever the assessment order is made, there will be a computation sheet attached with the assessment order. Whenever they try to import TDS refund, TDS self-assessment tax credit, the system is not allowing them to import. If the time limits are getting over, what the department says, they will reject, they will ignore the TDS everything, they will pass an order. After which we need to go back to the department, we need to file the rectification to follow up that. Then they will have the manual. This is what normally nowadays it is becoming more issue here. But in the situation when if you want to claim immunity under 270AA, you would have filed rectification, but the order would have come with more tax and interest. Whether you need to wait till the rectification is over or you pay the amount whatever you are determined. Again, the best decision is to, whatever you have determined, saying that whatever the calculations are there, you pay the tax and put across the application to the assessing officer, let him decide over that application. These are the two things which are there. Whenever the assessing officer rejecting the application, he needs to give opportunity of being heard to the assessee. That is, which is natural justice, which we call. These are mainly about the first section 270, and then how you can come out from the penalty by filing an application under immunity under 270AA. Now coming to the next again important section is penalty in such cases. There are total three sections are there under this clause. It is basically, the difference is when the search was initiated. If the search is initiated between 2007 and 2012, it is 271AAA. If the search is initiated 17/2002 to 15/2016, it is 271AAB. Under that, there is a different clauses again. After 15/2016, what will happen? What is the penalty amount? The penalty amount in the first class till 2001, it is only the 10% of the undisclosed income. In the second link, there are total three are there. If any such happens and if any person admits the undisclosed income and he substantiates the manner in which the undisclosed income is earned, that time that time the penalty will be only 10%. And he filed the return of income and paid taxes. That time the penalty is 10%. In the second, after that, if the assessor has not disclosed in the such proceedings, but he has filed in the income tax return all this undisclosed income, that time the penalty will be 20% of that undisclosed income. Apart from these two conditions, if you are not disclosed during the such proceedings, if you have not filed the undisclosed in the return of income, that time the penalty will be 60% of the undisclosed income. And if it is such is happening after 2016, there are only two clauses which are there, 30% and 60%, not like before 10, 20, 60. It is 30% and 60%. If you have filed in your return of income disclosing all the material facts and substantiate how the income is arrived, the penalty will be 30%, otherwise 60%. Now, I think the major misconception what we call is, for all the assessment year, if such happens, it will, I think most of you know, it will not be happening or any assessment will not be opened only for 1 year. It will be, previously it used to be block years, then now the period is left under 148, you can open till 10 assessment years. Whether this penalty applies to all these 10 assessment years or how many years is the question now. If you go through the provisions clearly, they have explained what is undisclosed income. Undisclosed income is any income of specified previous year represented found during the search in the form of bullion, jewelry or other valuable item or thing which was not recorded before the date of search or which was not come before the PCIT. Now in this they are specified what is specified previous year. What is specified previous year? Specified previous year is a year which has ended before the date of search, but the date of filing the return of income has not expired. That means the search has happened, but the due date is still there to file the return of income. That year will be called, if you have not filed the return of income, that year it will be called as a year of specified previous year. Why the difference is there? Why they have to make? Everywhere if you understand the intention of any of the provision and the logic behind it, that is when you find the beauty of the Income Tax Act. In this section, suppose if this section was not there, a search has happened in the previous year and the assessee comes and files the return of income saying that this is what my total income. Then there is no provision left with the income tax department to levy penalty on this undisclosed income for that respective year because everything is disclosed in the return of income. That is why this provision was brought in to say that the specified year after the search happens, if you file any return of income for the current year, that will be considered as undisclosed income and the penalty will be levied. For the rest of the years, anyways you have the 270A that will take care of you. For the rest of the years, 270A will not cover. That is why this section was brought in. And there is an exception, if you have seen there, they have given that exception of 271AAB. That is why they brought it there, the difference. If penalty is coming under this section, penalty will not come under 270A section. That is the reason behind it. Now, as I mentioned to there, 270A, there is a mention of false entry there. As I told you there, they have not explained what is the meaning of false entry there. That is limited to 270. After GST has come into picture, you would have seen many raids happening and then fake invoices, fake bills, all those things are coming to picture. That is when this section was coming to picture from 1/4/2020. If you see the wordings of the section, it will start with without prejudice to any provisions of the Act. If there is any other provision also, this provision overrides all the other provisions, this provision will attract the penalty. Even if other provisions have the penalty, along with that penalty, this provision's penalty also will come into picture. What is the default? During the proceedings, if they found that any false entry or any entry relevant for the computation of total income has been omitted to evade tax liability. What is the penalty here? 100% of such false entry. This is very serious clause which we need to take care. If the assessing officers start invoking these sections, then it becomes very difficult for us to defend it. What is false entry? They have defined here false entry. They have not defined false entry there under 270A, but they have defined false entry under this section. What does false entry means? False entry includes forged or false documents such as a fake invoice or any invoice of supply or receipt of goods or service issued by any person without actual supply or receipt of goods or services. There is a supply, but there is a supply invoices there, but there is no actual supply. That is how the fake invoices. If you are falling under that section, this clause will attract, and the seriousness of this clause, you know that's 100% penalty without prejudice to any of the other sections. And then any invoice in respect of goods or services are both to from a person who does not exist only. The person itself is not exist, but you have raised an invoice. That is a false. That will be considered as a false entry. For that also the penalty will be the 100%. There is a subsection 2 also is there. The person penalty can be imposed on any other person who is indirectly involved. Suppose proceedings are going on one person and under his possession you found that fake invoice. Fake entry is there under this section. What will happen to the person who has given that bill? The assessing officers can invoke this section and can levy penalty on that person as well. That means for the same transaction you are having a penalty for the person who is in receipt of the fake invoice and who is giving that fake invoice as well. That is how the seriousness of this section is there. Penalty under this section can be levied at any point of time during the proceedings, reassessment proceedings, any time it can be levied. Penalty under this section can be levied without, even though there is no actual impact on total income. You cannot argue saying that there is no change in my income or there is nothing additional deletion happened to my income. If you found that there is a false entry, penalty can be invoked from this section. Then there is a section for penalty for intangible additions. if you have come across, I think the last section, the last series would have 68 to 690, unexplained investment, unexplained expenditure, cash credit. You have a tax payable there, 60%, and the penalty along, and there is a surcharge and assess addition to that. And apart from that, you have a penalty of 10%. And if penalty is levied under the section, 270A will not be imposed. As a, we can't call it as a tax planning. Suppose if you are handling any assessment or any proceedings, you can look up this option. Suppose any decisions they are willing to make, you need to see if it is falling under 270A, what will happen? There is a 30% tax, and then there is a 200% if it is falling under. That means almost 100% of that is going under that section. If you can just place that here, you will have a 60% tax plus surcharge plus only 10% of penalty. But how do you put across is a question left to the people who are in the practice. That is one of the planning or something you can look after. And then the very important clause again, if you have seen from last 3 to 4 years, the trust provision, I think so the next clause, the next session is also the trust provisions. Why it is becoming more important is the amendments, what has happened to the trust provisions. Before that, you have to just register trust and you can keep quiet, you need not to renew it for that. Now, every 5 years, you need to renew that trust application. Now, that means there is a chance for the assessing officer or the CAT exemptions to look into your books of account and can see whether you are actually doing charitable activities or not. That's how, if you come across all the major amendments from last 4 years has happened in the trust sections. One such amendment is this. This is brought from 1/4/2023. Previously there is a provision if there is any benefits passed to specified person under section 30. There used to be very strict provision, your registration will get cancelled. After that amendment, they have come up with tax on it. If there is any specified benefits passed on to a person referred under section 30, like the trustees or any person, whoever is there is a tax levied on that. Now, in addition to the tax, there is a penalty. Whatever the income is there, the penalty amount will be that income. If you are doing the same mistake again subsequently, it will be 2 times of that income. If any benefit, whatever benefit is there, if it is a first mistake, it is 100% of the total benefit. If it is again you are doing the same thing, it will be 200%. That's why we need to be very careful when that any benefit or any transaction happening between the trust and the trustee and all those things, we need to be very careful while doing the trust audit as well, while filing the form. Then failure regarding books of account. The income tax has specified some of the provisions, who are the persons who needs to maintain books of accounts. If you are not maintaining the books of account, the penalty will be 25,000. And there are specific provisions which tells that who needs to, whose books needs to get audited under that income tax. If you are not getting your books audited, the penalty will be 0.5% of the total sales or turnover, or 1,50,000, whichever is less. The main dispute between under this clause is whether you can audit books when there is no actually books. Which provision will come into picture? If you have not maintained books, penalty will come 25,000. If you have not audited books, 1,50,000 or 0.5% will come. If you have not maintained books only, whether penalty will come under 271B? The question is no. If there is no books itself, how can an auditor can audit books of accounts? Only the penalty will come under first clause, the penalty will not be coming under the second clause, 271B. Penalty for not filing returns and statements, what are our miscellaneous, these are all miscellaneous sections. If you are not filing your return of income within time limits, you have a penalty till assessment year 2017-18, 5,000 rupees. Now it was came as a fees if you are not filing that 1,000, 2,000 and 5,000. And then if you are not filing any SFT transactions in the time limit, it is 500 per day for default, and then under 1,000 rupees per day of default if you are falling under the section 271 FE. If you are furnishing any inaccurate particulars in the SFT reporting, then the penalty will be 50,000. And then when it extends to international transactions, certain activities will not consider as a business connection in India. If you have business connection in India, it will be taxable in India as per the international transaction provisions or income tax provisions. That time if you are not disclosing the business connection provisions, the penalty will be 5 lakh. And then if your fringe benefits, it was there before, there was a penalty of 100 per default. And then one more important penalty is penalty for non-compliance of TDS and TDS provision, which we come across more often during this period. What will happen if you have failure to deduct? The provisions are very important. The provisions tells only if you have failed to deduct tax at source under the sections 192 to 196D, and then under the remaining sections, amount equal to tax not deducted or paid. Here the section tells only if you fail to deduct, not fail to pay. Fail to pay penalty will be taken under the different sections. Here the penalty will come only if you have failed to deduct. That time the penalty under this section will be invoked. And under the same way, TCS, if you fail to collect TCS, then the penalty will come into the picture. And then if there is a time limits when to file TDS returns and TCS returns, if you are not filing within the due date mentioned under there, the minimum penalty will be 10,000 and the maximum penalty will be 1 lakh. Suppose we come across nowadays, the modern days, we render mutual CFO services as well. These are some of the provisions which we need to tell to the company, saying that there are some provisions are there, critical provisions are there which you need to take care, otherwise the penalty will attract. What is small exemption given under 271H is if you have paid taxes but you have not, if you have failed to deduct taxes but you have filed the return within 1 year from the due date mentioned here, the penalty under 271H is not leviable. That means you have a grace period of 1 year to not attract the penalty under section 271H. Whether penalty is levied, as I told, whether penalty is levied for non-payment of the whatever the tax is deducted under 271C, no. Penalty will not come under this section. Penalty will come under 221 when you fail to pay within the time limits. Then there are different miscellaneous clauses which are there, statement of reports or the information whatever are there, which we will cover. In an international transaction or specified domestic transaction, you need to maintain records or whatever the accounts or any transaction details which are covering under 92D. If you are failing to maintain all these records, the penalty will be 2% of each international transaction or specified domestic transactions entered into. You have very severe penalty provisions under this international transaction because the penalty goes to 2% of the international transactions, which means if the international transaction is more, the penalty will be more. And if you fail to furnish information and documentation as under 92D4, the penalty will be 5 lakhs. Again, under 271G, if you are failed to furnish any information or documents as required under 92D3, 2% of the value of the international transaction as well. If you are failed, the 271I, this is very important section for our CAs and the people. Suppose any international transaction, any remittance is made towards outside India, wherever there is 15 CA and 15 CB needs to be issued. If you are not following the provisions or not issuing the 15 CA and 15 CB, the penalty will be 1 lakh. And the CS also, when they are issuing 15 CB, they need to be careful if you are furnishing any inaccurate details in the 15 CB, because 15 CB needs to be issued by CA. CA is a part of the SSA. There also the penalty might come to the chartered accountants to the extent of 1 lakh rupees. Then there is a provisions under 285A constitution entity, which is called global entity. For all the MNCs, this clause will be applicable. If there is an head office which is there outside India, if there is an Indian subsidiary, they need to maintain that all the records of their constitution entity. If you are not maintaining the records under 285A, the provisions again, the penalty will again attract at 2% and 50,000 in any other case. And 271GB also, if you are failed to maintain report or fail to submit documents anywhere, the penalty will go to 5,000 per day and 50,000 per day, which is again serious offence which is considered, which we need to keep aware what are the provisions are there. There is a report which you need to furnish, a TP report which you need to issue. If you are not issuing TP report in the set timelines, then the penalty will be 1 lakh. And if you 271BB, which is not applicable now, it is all From this assessment year, it is not applicable. This is applicable to all the LIC insurance companies, 88A section. Now it is not applicable from this year. The 271J section, which is even applicable to chartered accountants, whenever you are giving any information to the income tax department, if there is any incorrect information by merchant banker or valuer or any chartered accountant, for every default of that incorrect information, 10,000 rupees penalty will be levied. And then failure to furnish statement. If a charitable trust is there, they need to file this form 10BD and they need to give the donation certificate to the SSC. If they fail to do so, the minimum penalty will be 10,000, maximum which will be extended to 1 lakh rupees. I think the penalty clauses under 271D, DA, 271E, which will come for repaying deposit in cash, accepting cash over 2 lakhs, and all would be covered in the previous session, I guess. That's why we won't cover much of this. And then there is a miscellaneous section which is there under 272A. If you are failing to answer any questions to the IT authority, the very important thing is, I think we need to tell to the clients as well. Whenever the notice is issued to any of the SSC, it should be addressed whether you need to ask for adjournment or you need to comply in such a way saying that okay, these are the basic information I am providing it. The remaining information I will provide in due course, or put it across saying that I need further time. It should not become as I am not responding to that notice. There is a powers to the assessing officers to levy penalty on non-respondent of notice also. Nowadays, if you see, if you don't file any reply to 142 on notice during the proceedings itself, you will be called to impose a penalty. That is where the seriousness the department is taking, because now it has all become computerized, all AI driven and everything. It is very easier for them to track and levy the penalties. That is where we need to make aware the client saying that what are the notices received. Either ask for the adjournment or respond it in a way. If you are not able to respond, ask for some time or furnish basic documents. But don't leave it as unresponsive notice. And then if you are failing to furnish any of the TDS returns and all, TCS returns, all the returns, whatever the miscellaneous returns are there, for every day default, 100 rupees penalty will be there. Now, failure to comply with the provisions of PAN. Under Income Tax 139A, they have specified who needs to obtain PAN and in what cases you need to report your PAN as well. Suppose you are purchasing some of the assets or any gold if you buy also, there also the rules were made saying that you need to disclose your PAN to the people. If you are disclosing the wrong PAN or if you are not at all disclosing the PAN, the penalty can be levied up to 10,000 rupees. And in the same way, if there is a TAN which you are not disclosing in the proper way, or if you are furnishing the incorrect TAN, then also the penalty will be levied at 10,000 rupees. Now, the penalty is over. What are the ways, what the SSA has to do? We have discussed already immunity under section 271AA, which is immunity for especially for the 270A, under reporting, not for the misreporting. There are sections which we can ask from principal commissioner or the commissioner to reduce or waive penalty. Under what circumstances the CIT will have the powers to reduce or waive penalty? If he is satisfied that the SSC whoever is there, he has acted in good faith, he has voluntarily disclosed and cooperated in inquiry and made specific arrangement for payment of the tax. If the disclosure was made before the assessing officer, before the detection made by the assessing officer, the CIT or the PCIT, we can file an application before the CIT and PCIT, they can reduce or the waive penalty. But there are two different kinds of waiving or reducing penalty. 273A, 1 and 2 section specifically talks about reducing or waiving penalty, but this is one-time life opportunity. Only once in a life you can apply for this immunity. If the penalty amount is more than 5 lakhs, then the CIT or the assessing officer needs to take approval from the higher authorities, Principal Chief Commissioner, PCCIT or CCIT or DCIT need to take approval. If the penalty amount what he is reducing or waiving is more than 5 lakh. But the reducing or waiving under the section, if you are filing an application accumulating some years, that is only considered as one-time application still, but you can't go after that and ask for immunity under this section. This is one section under 273. Then there is a different section 273(4). Where you can file an application to the PCAT again for reducing or waiving the penalty. Under this section, if the PCAT or the commissioner satisfies that if the penalty is levied, it will cause a genuine hardship to the assessee, and the assessee has cooperated in all the proceedings or inquiries during the assessment. As I said, 273 1, 2, 3 subsection, it was only one-time life opportunities. This is not like that. You can file multiple applications this. But if the penalty is exceeding more than 1 lakh, again the approval he needs to take it before PCCAT or CCAT or DCAT. That is where the difference. Whenever you are trying to file an application, you need to make sure that the application is filed under 273(4), not under 273(1) or 2, 3 sections. Because that is only one-time life opportunity. This is, you can file application. But whenever the application is filed, the assessing officer of the PCAT, they need to decide within 12 months from whether they are accepting or rejecting the application. You will have a 12-month period to decide on that. In the meanwhile, you can file a new submission saying that what are the genuine hardship and all those things. But practically, if you see, the approvals needs to get from PCCAT and CCAT, which will be little difficult when we get it. Whenever if they are rejecting an application, there should be proper opportunity of being heard should be given under this section. Immunity on abatement, this is specifically 273AA. If you are aware of income tax settlement commissions, now it is income tax settlement commission is abolished, but if the proceedings are there, if an application is filed before the income tax settlement commission and the application got rejected, what happens is income tax settlement commission applications, you need to pay tax before you file an application. You need to disclose all the income before. These are the conditions to go for the income tax settlement commission. The income tax settlement commission is a body other than, it is not part of the income tax department. They will take a different direction. They will, how the proceedings will happen is it will be closed proceedings. No one will, not like income tax tribunal where the proceedings will happen open court. Only the assessee will be present and the income tax officer will be present. They will decide. They will, basically the name itself is the settle. They will settle what is the income and what is the tax additional payable. If suppose during the course of any proceedings, there is an application which got rejected in the settlement application, now that time all the records will come to the PCAT. They will, income tax officer again they will start the assessment proceedings. Now there will be a chance for the assessing to why people will go to the income tax settlement commission is for only the main reasons are two: to get an immunity from the penalty, to get an immunity from the prosecution. Now the same thing they can get here also by filing an application before the PCAT, but the only thing which they need to do is they need to disclose all the income whatever is disclosed before the settlement commission or the additional income whatever is there, and the manner in which the income tax, manner in which it was earned. This they need to prove before the income tax officers. Even the settlement commission, when they pass an order, if they accept any application, there will be some certain conditions which they will put it. In the same way, the PCAT also will put certain conditions which they need to adhere to if they are getting an immunity. In future, if they are not adhering to that, the PCAT will have the rights to remove that immunity, whatever is granted before. The final clause, the 273B, this is a reasonable cause awards penalty. All the proceedings, most of the proceedings under this penalty, if you are explaining the assessing officer that there is a reasonable cause to, I have committed this offence, but there is a reasonable cause which was existed, that is why the offence is committed under the Income Tax Act. If you are able to prove to the assessing officers, then the assessing officers can waive the penalty whatever imposed under the section. But there are certain penalties which can be passed without even giving the reasonable opportunity. Like the such case, whenever you go for such case, if you find any undisclosed income, there need not be any reasonable cause. Even the assessing officer will not accept the reasonable clause. And then when you have not responded to the notices, 142 notices and all that time also the reasonable causes cannot be given, cannot avoid. What do you mean by the reasonable cause? Reasonable cause they have not explained, but in a general meaning is applied to human action is that which would constrain a person of average intelligence and ordinary prudence If an ordinary prudence, if you think in, or normal person, if they couldn't do in the whatever he has to do, but he couldn't do because of certain circumstances and whatever he faced during that time, that will be considered as a reasonable clauses. But it is subjective. It is all based on how much reference you take from the judicial pronouncement, whatever is levied on. Now the procedure for levying, this clause is not much important now, because any penalty more than 10,000 it needs to be approved by the JCIT. But as you know now, everything has become faceless. You will never know whether the approval is taken by the JCIT or whether the approval is coming from, you will find only one person name. Whether all the approvals are there or not there, you will never be able to know. That's why this clause much not relevant. It is relevant, but we will not be able to comment on that whether certain approvals were taken or not. Because everything is national faceless, you will never able to, there are certain, so many sections under this is the main issue. What is that? There are certain sections which needs to be given by JCITs or ADITs. But whether the approval is taken under the faceless, the department only has to answer this. And then as assessments become faceless, there is a scheme which is given for the faceless for the penalties also. Now most of the penalties are operating under the faceless only. Very few, if they feel that there are too many notices, then they will issue a circular saying that some of the penalties you have to go to the assessing officer and deal with it. What are the time limits for levying these penalties? 6 months from the end of the assessment order whenever it is initiated, or if it is a subject matter of any appeal, if you have filed an appeal to any assessment order and then you receive the order, within 1 year from the end of the order in which the CAT order is received. Suppose if it is a case of ITAT order, within 6 months from the end of the month in which the ITAT order is received. Or in the normal timelines, if you have received a penalty notice in the month, within 6 months from the initiation of the proceedings, they need to pass an order. If any notice which is passed beyond the time limits, that is not valid. When we receive the order, the first thing which we need to check in the order is the time limits, whether it is adhered to the time limits or whether any approvals are taken care. And one of the most important thing which I forgot to tell you is that under 270A, whenever they issue notice, if you see so many orders, there is a difference they made for underreporting and underreporting in consequence of misreporting. But if you see the orders, they will not mention whether it is underreporting in consequence of misreporting or underreporting. When they give the notice itself, they will tell, or they will forget to mention in the order, they will put it in the notice, penalty notice, or vice versa, which will happen. That is one of the important thing which you need, if you are appearing or if you are replying to any of the notices, this is the point which you can take during the litigation time. One more important thing is, there are total 6 subsections are there for the misreporting. They need to specifically again mention under what section it is falling, your misreporting. Just simply they cannot say that underreporting in consequence of misreporting. There are 6 subclauses are there, which is the subclauses which the SSC is falling under. That is the main important thing which they need to look after. That is all about the penalties. Now coming to the prosecutions. The prosecutions nowadays, they have taken it, department has taken very serious. And if you see, there are so many prosecution notices were lying before the CCATs or CCTTDs, and practically there is a pressure from the higher authorities as well to deal with that prosecution faster. Because again, the total intention behind the prosecution is that it is, sometimes it is not, sometimes the department in what way they look after this. Now the assessors are relaxing, they might feel saying that there is no serious consequences. Then at that point of time, they will hold some big person or some person and they will levy this, they will initiate this, that they will have to initiate the prosecution. And then they can show it in outside saying that the department is serious about it. And if you see each CAT TDS, they are having 70 to 80 files with them in the last month. That is how the seriousness has become. And it is not for the recent years, it was again for, it started from what we dealt is from assessment year 13-14. From there it was dealt. Again one more important thing in the prosecution is there is no time limits when to initiate this prosecution. And this is not faceless, it is all physical. And you will not be aware when this prosecution is initiated also. Sometimes not in income tax portal you can find all the notices, but not prosecution notice. You have to go to the traces portal. There also you will not find this there also you will not find this. Prosecution notice will come only to the mail ID which was registered with the traces, or it is to the address physical copy you will receive it to the registered address. Some of the cases they will not be aware also that prosecution is launched against them. Why this prosecution is brought into picture? Because everywhere the compliances, if you are compromising on the any compliances, there should be consequences for that if you are not adhering to the compliances. That is when this prosecution, they are brought in with this intention. This was used as nowadays this was used as a tool for revenue collection as well. Why prosecution is used for revenue collection? Compounding charges again. That is when it was seen from the department using it as a revenue collection as well. It is all against the persons who thinks that they can get away with whatever the mistakes are made in the as per the income tax provisions. In March 2024, if you have Supreme Court has issued notice to one of the actor in Tamil Nadu, S.J. Surya, if you are aware of it. He has not filed his income tax return for assessment year 2002 and 3. The proceedings were started from that time, and then they were arguing saying that I have paid a total taxes of it till now, but why the prosecution should be launched? The Supreme Court has came across the decision saying that it is not that whether you paid taxes or not, you have not filed your income tax in time in the time limits provided as per the Act. The prosecution notice can be issued for this, which is the recent one, which the judgment is. That's where the serious.
Which year they issued notice, sir?
Sorry?
In which year they issued notice for
2012, 13, 13, 14 it is going on. Because the proceedings 2002, 3, they would have a assessment reopened can 6 years. From there the assessment proceedings would be going on. When it is closed in 2012, 13 and 13, 14 they have issued the notice, which has come 2023 to before Supreme Court. It is all, the litigation is all based on whether the notice whether issued is correct or not. Because there is no time limit for the prosecution, they can issue, but it should not be again unreasonable time limit. It should be reasonable time limit for the department also to issue the so-called notice. Then the Article 20, which says no person shall be prosecuted and punished for the same offence more than once. If there is an offence once committed, you should not prosecute him for the same offence second time or under the different acts. Who is liable to be prosecuted? Any person, whoever commits an offence under this act, they are liable to be prosecuted. In a company, who are responsible for conducting the affairs of the company, the directors or the managerial person, based on that, what operations they do and what are they are doing, based on that they are also liable for the prosecuted. In case of firm and EOP, HUF and all this, managing partners, other persons. But it is all based on to what extent they are involved in the business. What is offence meaning? Offence meaning they have not defined under the Income Tax Act, but it is defined under the criminal proceedings. Any act or omission made punishable by any law for the time being in force. If you have committed any act or omission under the act, it is really considered as an offence. And then there is a compounding of offences, which we will talk it later. Now there are total 2 provisions which the department is continuously invoking, these 2 provisions when it comes to prosecution. One is section 276B, the second is section 276BB. 276B, failure to pay TDS. Most of the people who are there in the litigation practice, they have come to an argument saying that, see, if this section will come into picture only if you fail to pay credit to the government as per the provisions laid down under the Act, the TDS or the other things. Now, from the SSC point of view or from the representation point of view, I would have not paid my TDS within the time limit. Suppose there is a due date to pay the TDS within May. I have paid in July. Whether that will be considered as a reason for levying the prosecution, there was a much argument or some high courts have made a different decisions, but the Supreme Court has clearly mentioned saying that you are supposed to pay to the government within the time limits. Even if you are paying any late, even 1 month or 2 months or 3 months, it will be considered as a offence and the prosecution can still be levied. This is what the Supreme Court has said. Now, whether for all the offences they are levying this prosecution, they have some CBDT circular which, if there is a delay of 6 months or 25 lakh default, they are not issuing this prosecution. There is a CBDT circular which is there. If it is more than that, they are initiating this prosecution. What is the punishment under this? The punishment under this is the rigorous imprisonment not less than 3 months, which might extend to 7 years. What is the recourse available to the people whoever commits this offence? They can explain the reasonable cause, one option. The other option is apply for compounding. Again, coming to the practical scenarios, what is meant by the reasonable cause? Again, it is subjective. Again, it is to the satisfaction of the assessing officer. The main contention what the assessing officer will come to the authorized representative whoever represents you. This is you are appointed as a nominees of the government where you have to deduct tax and you need to deposit the tax. That is not your money. That is a government money which you have kept it in your custody. You need to deposit the same in time limits. You cannot use the same money for your business purpose. If you are coming across any prosecution notices and all those things, this is the main thing which you need to explain, saying that I have not deducted one part and have not utilized the same money for any of the business purposes. This is one thing which you need to prove. One of the decision, what is considered as a reasonable cause is oversight on part of the accountant. If you can prove saying that there is apparent mistake or the duties are delegated to the accountant because of his oversight or any mistake from the accountant, these things has happened. That will be also considered as a reasonable cause, but you need to link this with the case whatever it was mentioned here, because it's not all the time. You cannot say that oversight of accountant, please grant immunity from the prosecution. It cannot be said every time. You need to put it in such a way that it will appear as a reasonable cause. Failure to pay TCS. Again, if you are, whatever the provisions applicable to the TDS, the same thing will apply to the TCS. If you are not paying the same thing within the time limits, the prosecution will be launched. Again, the imprisonment is 3 months to 7 years. You need to demonstrate the reasonable cause for such failure. Now 276C, willful attempt to evade tax. What is this willful attempt to evade tax? Suppose if there are total 3 kind of things. If there is a willful attempt to evade tax, penalty or interest chargeable or impossible under the Act, one, which is future, and then if you are willingly underreporting your income, and then you have already evaded payment of tax. If these 3 things are considered, and if the tax amount what you have evaded is more than 25 lakh, then the imprisonment of 6 months to 7 years it will be there. Otherwise, it is 3 months to 2 years. Thanks to the government, I think so now they have revised these limits after so many years. Previously it was only 1 lakh. Now all the sections under this prosecution they have increased it to 25 lakh, which is at least some limit was there. Not that every small offence prosecution will be launched. Serious prosecution is launched. Willful attempt. What is willful attempt? Willful attempt includes if he in his possession or control any books of accounts or documents containing false entries or statements, makes or causes to make a false entry. If you are inducing some other person to make a false entry or any statement, or you are willingly omitting some records, or causes under any circumstances to avoid any tax. Whether willful default, what is willful default? Again, it is subjective. It is not willful word meaning they are not defined anywhere. But what you can draw references, it should, if it is an intentional, deliberate, calculated and conscious with the full knowledge of legal consequences flowing from them. You are aware of all the provisions and you are doing intentionally, deliberately the offence, that will be considered as a willful attempt to evade tax. Now 276cc, failure to furnish return of income. I think so most of us will not be aware of this section only. If you are, normally whatever we tell to the client is, if you are not filing the return in the due date, provided in 139(1), still you can file revised return or you have the option to file an updated return. But the department, if they take, if they look at this section, if they want to apply this section, the prosecution might come under this section as well. If you are not filing, the return of income within the time limits provided under 139(1), not under 139(4), revised return, not belated return. If it is not filing the return within the due dates provided, the prosecution can still be launched. But the amount of tax avoided, if it is exceeding 25 lakhs, again the limit has been increased 6 months to 7 years. In any other case, 3 months to 2 years. Previously, there is a prior to 1975, there is no prosecution for this. But after 1975, if you have filed updated return within time limit, return filed within the time limit, then they will not be. Then you will not be having any prosecution. But there are conditions to it. The tax whichever is paid, it has to be paid within the due date. After considering your TDS or advance tax or any self-assessment tax, if you have paid all the taxes before the due date of the return of income, then you will not be prosecuted. If it is less than 10,000, it is not prosecuted, it is considered as a normal offence. If it is more than 10,000, you will be prosecuted. That is why we need to ensure if any SSC coming to us on the last day of filing return of income, at least we need to suggest them, if you are estimated your income, we can suggest them to pay the taxes on the last day of the return, self-assessment tax. He can avoid interest, he can avoid this prosecution as well. Estimate and pay the taxes.
Previously, 2006, we see failure to take TCS also failed.
Which one, sir?
Failure to take TCS, I think the section.
276 BB. Now coming to section 275A, 75B, 276 CCC. Suppose whenever a search is conducted, suppose there is an article or thing which the assessing officer can't take it to the department to seize it. What they will do is they will put it in a room or they will lock it and they will put a seal on that saying that no one should touch that article or thing. If you are contravening to any of the provisions, whatever is mentioned there under that clause, then the penalty, then the prosecution will come for a period of 2 years. And then if any officers coming to search your premises and you are in possession of some electronic records, if you are refusing to provide any electronic records information to them, then also the penalty can be levied to the extent of 2 years. And penalty prosecution, if you fail to file return in such cases, it is previous section 158 BC, which is there for the block assessment. Now this provision is not much important. Now again, under 276D, willful failure to produce accounts or documents. Whenever there is an inquiry under any of the income tax proceedings and you are willingly failing to provide any accounts or documents, the income tax officers, we need to be very careful. As I said, when they are issuing 142(1) notice, if you are willingly not producing any documents, they can still invoke this provisions and can start issuing notices for the prosecution. False statement in verification. If you are giving any statement to the income tax officers during the search, survey or any verification of the statement, if you are giving any false statement which has the consequences of any income which is evading any income which is more than 25 lakhs, then you will have a serious offence which will have 6 months to 7 years imprisonment or 3 months to, if it is less than that, 3 months to 2 years fine. And then if you are producing any false documents or false books of accounts, even that is why we need to be very careful when we give some document with signed, if it contains any false information or false document, that will still be considered as a point for the income tax officers to initiate this. Abatement 278. If any person induces other person to file false written account or statement, and then that has the implication of more than 25 lakh, then it still be the imprisonment will come for that same offence 6 months to 7 years. If it is less than that amount, 3 months to 2 years. Again, this is very serious thing. If in under any circumstances, if the department comes across say that the chartered accountant has inducing to some other person to file the false return and everything, they can still invoke this provision. Not only chartered accountant, any person. And 278A, second and subsequent offence. Suppose there is an offence already committed under this chapter, and you are committing the same offence again second time, then the imprisonment will be more than whatever is under the normal provisions. There are different provisions under this. The second offence, the subsequent offence will be considered as, suppose there is a section, for the same section if you are committing again subsequent offence, that will be only considered as a subsequent offence. different offences under different acts, it will not be considered as a subsequent offence. Coming to the company and HUF, as I told, when a firm or the company commits any offence or person, who was the person who needs to be prosecuted? The person, whoever is responsible at the time of that offence, that person will be considered as an person who needs to be prosecuted. They will issue a notice under section 235 to substantiate whether you are the principal officer or not. Most of the assessees fail to respond to that notice, because what happens is, now there are total 10 directors are there in the company. Now the income tax department will not know whom to prosecute, who is responsible person who has committed this offence. That's why they will issue notice to all the 10 directors saying that you prove now whether during that, when this offence is committed, whether you are aware of this offence or who is responsible for that offence. That is when the directors needs to respond to the notice accordingly, so that at least all unanimously 10 persons can nominate one person and say that okay, this is the person who is there, at least you from here you take care, at least deal with this. Otherwise what will happen is, if you are not giving a sufficient reply to them, they can initiate prosecution on all the 10. Instead of issuing all 10, at one person you nominate, and that one person can do that thing, whatever has to be done. Again, if such person shall not be reckoned to be guilty if he proves that offence was committed without his knowledge or exercised due diligence to prevent such offence. And for the HUF also, the same person, whoever the person, whoever is responsible, they will be considered as the principal officer. Now, what are the different kinds of immunity are there? If you are filing a settlement application, as I told you earlier, the immunity can be asked for the settlement commission, which they will give for the immunity from prosecution penalty. And then by a DRP also can give the immunity subject to certain conditions. And 278AB, if you have settlement application rejected, and then you can file an application before the PCAT to get an immunity from the for this prosecution. Under 270A, as I told, under reporting income, you can have the option to get an immunity from the penalty and the immunity from the prosecution as well. But what happens is, once prosecution is launched, that time you can't ask for an immunity. When prosecution is not launched only, you can ask for immunity. How the proceedings will go on is, the CAT will ask for so called notice saying that whether prosecution to be launched or not, you need to give your response. That after deciding the case, the CAT will come to a conclusion saying that it has to be prosecuted. Then the file will move to the assessing officer. The assessing officer will put it in the trial courts, judicial courts. That's when the proceedings will start in the trial courts. Again, very difficult, like the practical situation is, the magistrates whoever are there, they might not understand our Income Tax Act fully. They will be in a situation where they will see only the civil acts or the criminal acts. That is why there should not be any risk taking to go to that level, because it is all decided based on their judgment at that point of time. If they feel that yeah, this person has committed, they will sanction that prosecution and you need to ask for the bail. But for at least for some days you have to be there in jail, which is not required if you are adhering to all these compliances. Now there are two assumptions which Income Tax Act says. Before these provisions were not there, that time the income tax was facing so many litigations where saying that it is all burden on the income tax. If some allegation was made by the income tax officers, it is assessees or asked to say that who burden of proof on whom. Now they have brought specific provisions in this saying that if any offence is committed, there is a culpable mind already presented in this offence. It is that assessee who needs to prove to the department saying that there is no intention or there is no culpable mind is present at the time of committing an offence. And then if you find during the time of any search, any article, anything in your premises, it is presumed that it is yours only. It is the assessee who has to prove saying that it is not theirs. These two are the which presumptions the Income Tax Department has put it in the section specifically. Now the government approach. What is the government approach? What they are doing with this prosecution and the TDS? Under prosecution, the main things are majorly of TDS. How the government is viewing. Sometimes they view it as a serious offence. Sometimes nowadays it is unfortunate, but to tell that they are seeing it as a revenue collection. How the revenue collection will come is basically by compounding an offence. Suppose if any offence is committed and you have the option to go for the compounding. Compounding means for any offence committed, you can pay compounding charges and you can get away from the prosecution. There are certain categories, all these sections were defined in different categories, category A and category B based on the seriousness. Then you can file an offence. Then you can file an application before the CCIT or the DCIT, the compounding application. Then it will go to the CIT, they will ask a report from the assessing officer. Then they will determine how much is the compounding charges you need to pay. Before filing the compounding application, before it gets approved, you need to pay the total tax amount or the interest amount or the penalty amount, everything you need to pay before filing the compounding application. If you have to file the compounding application, then the CIT, then the PCITs will take a decision whether to accept that compounding application or the reject application. If they are rejecting the application, then they need to give an opportunity of being heard. If they are accepting the application, they will calculate the compounding charges and then they will mention it to you. On that moment, you need to pay that thing and you need to get out of this. This is majorly prosecutions related things and the penalties. As accountants, it is our duty, most of the sections, some of our chartered accountants might not be doing because they are not into the practice of income tax. They might sometimes think that, yeah, this is okay, this offense is, what will happen? They might take it lightly. It is better to always keep inform the client so that the blame will not come on to the chartered accountants. That is what we need to follow. And majorly for the virtual CFO service which is growing now, we need to, because the compliance is every day it is increasing. Suppose if you see it has started with some section 270A to 280D, which is 10 sections, now it has moved to 80 sections there under this clause. That means everything wherever they think that some offence where the assessees can try to invoke or there is something is happening, they can bring that and they can put it under this clause and say that penalty is there and prosecution is there, now you have to deal with it. Thank you. Any questions? We can take it. But thank you for the opportunity, for the patience listening. I think so. Congratulations to all of you. This is something which we need to have it because every time, because there will be so many problems which will come across. Even every day at our office we have this habit to revisit the income tax sections. Like suppose 6 to 6:30 or 6 to 7, we have the habit to read one section at a time and discuss. Because that is when you will get to know what is that is there in the act and whether we are actually complying it or not. Thank you for the opportunities and thank you for the SICASA also for giving me this opportunity and thank you.
Thank you, sir. Now take a 20 minutes tea break, sir.
Can we have a big round of applause? Good afternoon and welcome back. Sorry for the inconvenience today. It was beyond our control and speaker's control. And thanks for being here and bearing with us. We have Subhashini Ganapathy from Chennai to share her knowledge on this session on miscellaneous provisions. I request Chairman to escort her to the dais and greet her with the floor. Okay. Welcome to you. Please take this. A quick intro about CA Subhashini Ganapathy. She is a founding partner of Subhashini and Associates LLP, and she has completed a certification course on international taxation as well as on forensic audit, which is offered by both of these are offered by ICI. She is a specialist in tax consulting, both direct and indirect. Has addressed many forums on international taxation and other tax-related matters, both GST and income tax. She is accredited faculty by the Institute of Chartered Accountants and Ministry of Skill Development, Tamil Nadu. She is also a trainer for the GST officers in Tamil Nadu for income tax as well as and income tax also. co-opted member of Research Committee of Southern India Regional Council, and also co-opted member of the SICASA of Southern India Regional Council. She is also committee member of Society of Auditors at Mylapore. She has started an initiative with the support of YouTube channel RedPix 24/7, educating the general public and creating an awareness on the basics of income tax. And now also for GST for Common Man, which has all the procedures and preliminary do's and don'ts for the common man. The viewership of this has crossed 5 lakhs. That's wonderful. Congratulations. She has addressed more than 15,000 students as part of career counseling programs across Tamil Nadu. And she has keen interest. She was a national player in Kho-Kho, state level athlete, a lyricist of devotional albums sung by Mahanati Shobana and briefing by Sulavantar Sukhi Sivam. A lot of extracurricular activities also. A wide interest personality. Subhashini, welcome to you to this session, and it's a pleasure to introduce you all, her to you all. Thank you, and over to you.
Very good afternoon, ladies and gentlemen. So I thank the Bengaluru branch of SIRC for this wonderful opportunity. And just that when the Act was designed, there were like so many things missed out which came in as a miscellaneous chapter. So today the plan was all properly designed, but it so happened that there was some fringe deviations that I could reach very, very late. So thank you so much for the patience. And this miscellaneous chapter is something which probably like none of us have read even for the exams, except for like, whenever we get a circular, we see like, based on the power conferred on by section 295 and all these stuff. Even the SFTs, we are all more on this side. So it's interesting actually for both of us to learn together the miscellaneous chapter. So moving on to section 281. So certain transfers to be void. So what are the transfers to be void? So this 281 is one common thing where all of us would have seen when there is a share transfer or something, then now there's a lot of funding happening, etc. Everywhere there is a 281 certificate which is sought for. So basically to protect the assets of the the assessee, so that the income tax does not take over the assets after the transfer. So the transfer itself will become void if there is a proceeding in place. So if there is a proceeding in place, there are two conditions which is required. So there should be a proceeding in place. And even if the proceeding is kind of done, even if an order is probably like the transfer is done in between the completion of proceeding before the issue of order, still even then they can issue the notice and they can take control of the asset. And of course, like there is a benefit of doubt which is given to the assessee, like all of the sections here also. So if we can prove that the transfer was done in good faith and for adequate consideration, then the transfer shall not be void. It is protected. So there are various case laws. I can just give you the gist of the content of the case laws. So there were a scenario where like a notice was given, and it was a kind of family of 3 brothers. So one brother actually shared the property with the other 2 brothers, and that was said to be void because you had information that this particular property is to be attached and probably you have a demand liability. Then that was to be void. Suppose there is a liability assessed in the firm, then they can even go on to attach the property of the firm if the firm does not have sufficient assets or sufficient balances to settle the liabilities. So the basic idea was the recovery, and of course like was the incentives for recovery and all that. Even today it is there, probably like practically not there though in the Act. So all these recovery mechanisms, the government wanted some leeway, some protection in the revenue, so that the moment something comes up, we cannot transfer our assets to someone and get away with it. So in this, of course, like what happens if this particular provision attacks, like if there is a surface which is coming in, So there's also already a SARFAESI which is filed on a property and also a proceeding under the income tax. So who has the greater power? So there it is not, under proper consideration or in a genuine transfer. It is a kind of compulsory acquisition. So what could be the scenario there? Let's make it interactive, so at least I know that you're not sleeping post-lunch session. And first itself I gave the disclaimer that we will read these together. So what happens if it's a SARFAESI? So like if I am going to transfer this on the individual capacity, yes. So if the proceeding is on itself, so maybe like there is a demand which has come and maybe I have not gone on appeal, order is not confirmed, whatever. If there is a proceeding, then this is subject to this. So income tax will override the powers that I cannot transfer this particular property to anybody. So there is a indemnity or a protection for the asset. So and if it is a firm also, then the partners are liable. So even the partners cannot transfer their personal assets. There is no complete clearance for the partners because the firm has a liability which the firm cannot withstand. It is beyond that. So now all these scenarios, yes, the income tax has superpower. What if there is a SARFAESI act or some kind of compulsory acquisition which is coming up, maybe some airports and some metro or whatever. So that case, can the department go and say like, hey, my revenue is at stake, my revenue is pending, so you cannot touch my property. Can the department say?
So the compensation which they are getting, that can be attached, I think so.
Okay, that's out of the box thing.
Obviously, bankers will have the first right.
Bank will definitely have to give
They have the first right.
first right.
Right.
Ours is second.
So the bankers will have the first right because SARFAESI Act does not occur in one day. So it is like in a normal scenario where a demand proceeding is against me. For me, like I know there is a proceeding or a search or an activity against me and there is a probable demand and I will go and transfer my property to someone. So the intent of the section is to protect that in case if you have any assets, you cannot just do away with transferring your assets to someone or giving it as a gift to someone, all that will become void ab initio. So you will have to give it back to the department, the transfer is cancelled, except for the scenario where the transfer is done at arm's length with good intention and with proper consideration. Good faith and proper consideration are the only exceptions. But when it comes to the SARFAESI or the compulsory acquisition, etc., more for the SARFAESI Act. So SARFAESI Act does not occur on Monday and it is not my wish to go under SARFAESI. So when there is an income tax proceeding, I cannot just go and say like, now anyway income tax is going to take, now you take, anyway I will not pay my own. So it is not my choice to do that and it does not occur in one day or intentional transfer cannot happen in under SARFAESI. So that is the idea. So wherever there is a SARFAESI or a compulsory acquisition etc. by the government organizations, and that will have the superpower than the Income Tax Act. But Income Tax Act has the power to intend. And second is the provisional attachment, which I just include a few points here. Suppose there is a fixed deposit which is provisionally attached. So then that fixed deposit cannot even be renewed. And when I am asking for a 281, the assessing officer does not have powers to reject it. That's of course based on a case law, not on the act. So the assessing officer cannot reject it though. So based on the 281 certificate, he has to give clearance, maybe subject to so many things. There was one case where the assessee almost transferred. And intent, of course, the assessee pleads that I was not aware of the demand, etc. And the document was in the registrar office. So the registrar then understood that there is a demand and he refused to clear the documents, give the documents back to the assessee. Then the court said, subject to collection of this, you can release the document. So that is a conditional thing. That is also possible. Basically, 281 is to protect the revenue. So when there is a proceeding, when your demand you are not going to pay, and when the department wants to move ahead and attach your assets, etc., then your assets should really be yours. So that is the idea of keeping the assets intact, and that's about 281.
Madam, in case of compulsory acquisition, the building will be taken by metro or government, state government or central government. In that case, if I don't have any asset, in that case, whether income tax department in that case, what they will do? I mean,
No, compulsory acquisition, income tax department cannot stop. But when the money comes to the bank account, I have full right.
that's it.
You cannot go and pledge also.
Ah,
So you cannot go and pledge your assets also. So money comes, then of course I have. Your idea is there.
whenever money comes, the income tax department also will come. Okay.
Bank is the first thing they will attack now. Liquid assets are the wanted. So they don't want to take assets, build a real estate company. That's not the idea. They want cash to run the country. So bank is the first source. But in case if you don't have money in the bank also, then they can move ahead attaching your assets, movable, immovable, everything.
Yeah.
Movable assets also they can attach. So and this 281 can include movable assets also.
So how about IPC proceedings versus this?
IPC, I think IPC will prevail. So.
Prevail, I mean.
Only basis the case laws, I just saw like wherever surfacing compulsory acquisition, that prevails. And the intent probably, like again going back to the intent, it shouldn't be a scenario where like just to escape the income tax proceedings, just to avoid the income tax from attaching my property, I should not transfer. That is the case where the department can hold. They are in fact like they are giving exemptions for genuine transactions where the buyer bought it by giving a consideration without without knowing that this is going to happen or whatever. Irrespective of the fact that the assessee knew that he's going to get an attachment and that's why he transferred. So that way there is enough protection.
How long they can go back to the
For 281. When the proceedings are on. So it is like suppose the proceedings happen for 5 years. So then they can go back to 5 years. The proceedings should be on. That is the section. So they can
till 5 years, whatever transaction was done is void.
they can take it back.
Proceeding in the sense of appeal also.
Any demand, appeal also. Any proceeding which is on. But practically it doesn't work that way. Only in the case of transfer of shares, they take this 281 certificate. We all buy so much of properties, we don't get 281 certificates, right? Practically doesn't work that way. But I think the multinationals or whenever the venture capitals take the shares, then they are super careful. Without the 281 certificate, they don't do it. Either from the department or from the chartered accountant. So when we attest the 281 certificate, of course we follow all the institute guidelines, etc. We do a screenshot of the demand page with the date and we post it there and we give a clear disclaimer as to whatever is posted here in the portal is the basis for our certificate. Because suppose remote chance, but suppose if there is a scenario where the demand is not posted in the website, then we are not responsible for that. Because like I was discussing, there was an interesting case which an investigation officer was telling. So they were into, in fact the principal commissioners, they were into collecting about like 1,500 crores. There was a demand against a person and this case apparently came from Mumbai. So they initiated all the proceedings, 1,500 crores, they all felt like okay fine, target done, all that they initiated. And finally it was a PSU employee who was drawing salary of 12 to 13 lakhs per year. That is all. So he said like, and that 1,500 crores emanated out of a search. So this person has not even seen any search in his life. So that 1,500, then he said like no, 1,500 demand is there. Your own portal, your own PAN, notices are issued. But he said like, come on, 1,500 crores, okay, you want to take 50%, 70% tax, take, give the balance. I've never seen that amount of money in my life. So it was that. And but the serious part is the department could not actually locate actually the demand belonged to which PAN. See, apparently this 1,500 crores demand came to this man because there was a PAN error. That's what we can think of. So instead of AAPPS, I said like AAPDS, something of that sort. Some error has occurred intentionally or without intention. This demand has come to this person. But somewhere a mechanism should be there in the department to find out where this 1,500 should be collectible actually. And it's been 4 or 5 years and even today the department is not able to track where this 1,500 is collectible from.
Imagine the person is a cardiac problem. No?
You always have creative thinking. You are a creative child person. So that is about the 281. So in case if we are looking at the portal of the person where the 1,500 demand actually should have come, imagine we would have given a clean certificate. But there is a 1,500 crore demand against it, but until the department finds out, it is not on us. So we are okay, we take screenshots with the date, we paste it, this is the demand, this is the status of that proceeding as per the SSC today. If we are handling it, yes, of course we will give it, but even if we are handling, we don't handle it as a kind of, we don't have ownership of that particular problem. We can only give the status. So with all disclaimers, we give a 281 certificate basis which they do the transfers. Getting a 281 practically from the department is slightly bigger, but there is a case law, some Vedanta, which says the assessing officer cannot refuse giving you a 281.
In the adequate consideration you mentioned, even not even SR value is not SR value is okay, but even 0 or 1 or 2 rupees also it's okay. If you agree, both the parties agreed for land transfer, for example.
No, sir, like if you are saying that I am transferring this for a lesser consideration.
Yes.
Oh, lesser consideration, how this will be adequate consideration? So adequate consideration is arm's length, no?
No, both the parties agreed, even they can say.
Then it is a clear case, I am giving it to you to evade tax, no? 50 seats, they are not agreeing. Even the genuine transactions where it happens below the market rate, that they are not agreeing, there are notices, valuations, so many things which are happening. So this they will definitely not agree.
So, madam, I have a question. Just now you took the example, right? So, in that example, doesn't the assessing officer give the details as to why he is collecting 1500 crore tax from this person?
Yes, everything was there, sir. All the things, just
So
like
all the transactions that happened.
everything was there. Search, like what happened, what were the documents collected, everything was there. Story was there, just the title was missing.
Title is missing, hero is also missing.
Right, it went to a wrong title, that was the only problem. Other than that, it is a proper valid order.
So all those transactions were on the wrong PAN, is it?
No, the PAN was yours, sir. Search happened for you. Now the 1,500 demand has to come to you. But the assessing officer liked him, he put his PAN. So in this room, like we will not able to find out. Now for him, all records are there. So you had cash transactions of this. Yeah, I found like 100 kgs of jewelry in your place. All points, everything.
All transactions he replaced the PAN number with his PAN number, is it?
Yes, they are not able to track. That's why even I am surprised. Like there should be like some trail, some file, some because.
They can go back to the place, where they did the search and all those things.
Yes, ma'am. So if we were there, we would have definitely done. I also asked all these questions to him, but he said like it's not traceable. So that's where I thought like it could be intentional, where they wanted to make a mistake and it is made. 1,500 crores will never surface in his life.
Maybe some target in their office.
It's getting recorded, so you can talk whatever I am standing here. Have mercy on me. So next is the 281B, provisional attachment to protect revenue in certain cases. So this is where the officer can go ahead and provisionally attach the property. In case if I know that there is going to be a demand, there is a pendency of proceeding, and I can just attach the property, provisionally attach the property until the the demand is clear. And this provisional attachment is where I said like if I am provisionally attaching a fixed deposit, it cannot even go for renewal. So it has to be there. It is there, a lien marked type of a thing where the income tax assessment can happen. And this provisional attachment, again, like, is this a kind of decree? Is this a kind of decision? All these things are like discussed in various case laws. But the substance of this is once I attach this provisionally, then I have like if I feel that the assessment is going to go in the favor of the assessee, it is not collectible, then I can release. And if there is going to be like a collection, I can still hold on to it. And what I have to attach is the assets of the assessee, not of somebody else. And this provisional attachment can happen for a period of 6 months, not more than that. But in case if I think, suppose I went for a search and I found some assets and I just took, because like the basic presumption is whatever is in your possession is your assets. So I took the assets and I provisionally attached all those assets, maybe jewelry. So I can hold it for 6 months. Before 6 months, I'll have to decide on whether a demand is going to be there or otherwise. So if 6 months is passed and I'm not able to arrive at a conclusion on whether there will be a demand or otherwise, then with the permission of the commissioner, I can extend it up to 2 years, not more than that. And this extension cannot just happen like that. So it is like how the department says, no, like now it is time barring, okay, take 1 more 6 months. So it cannot happen that way. Commissioner has to give it with reasons. Now there are case laws which says like the commissioner did not apply his mind when he gave the extension. So even if the AO proposes that this case will definitely take away, which say a search case gets over by 6 months. So even if the AO writes he needs some time for what of material, the SSC did not, whatever reasons, the commissioner has to apply his mind and he has to make the decision, because the decision should be recorded in writing, like reasons to believe, 148. So he has to record the reasons in writing to extend this to 2 years. Maximum is another 60 days. More than that, they cannot attach. So once if there is a search proceeding or something and they have attached this, provisionally attached the property, after 6 months you can rightfully go and ask, you either give me or you give me the letter. So this is about the provisional attachment. So this is the proviso which says like extending the attachment, revoking the attachment with guarantee. Valuation, so in case of if you're going to say like you're going to give me a bank guarantee for this, this jewelry is so sentimental, I need it, and I'll give you a bank guarantee, perfectly okay. But bank guarantee at what value? I can take bank guarantee as a lesser value also. So in case if I've taken 100 kgs of gold and I feel your demand will tantamount to maybe 10 lakhs, I can even take a bank guarantee for 10 lakhs. But to take 10 lakhs or to take 1 lakh or to take 100 crores, I need to have substantives. I need to have reasoning based on which like how much this will translate into the demand and whether the bank guarantee will cover my demand, because the basic idea of attaching this property is to protect the demand, protect the revenue of the government. And if I am not able to arrive at how much the demand would be, then obviously what I have to assess is the value of the property, because I am going to give this instead of something else, instead of the bank guarantee. So I can refer this to a valuation officer and I can exchange this for a bank guarantee. And in case if I am referring this to a valuation officer, how much time do I have? I have 45 days. So if I am not referring this case to a valuation officer, I am making a decision myself, then I just have 15 days from the date of request of the SSC. I will have to release this and get the bank guarantee. And if I feel that it is going to translate into demand, then I can invoke the bank guarantee. And imagine a case where this is going in for years after years after years and the bank guarantee expires. What happens? So then the assessing officer should ask the SSC to come and renew the bank guarantee. If the bank guarantee, if the SSC fails or probably does not render enough cooperation to renew the bank guarantee, then he can immediately invoke it. So, but the bank guarantees, if we do bank audits, even in the bank they don't review the bank guarantees. We don't know what mechanism the income tax department has to track all these bank guarantees, etc. And this bank guarantee should be only from a scheduled bank as prescribed by the RBI. Service of notice generally. So earlier, like probably the senior members will see, not our generation, you all would have, the first thing the notice comes, the thing is you will check whether the notice is valid. So why should we even go into the facts? The notice is invalid, then just throw it there. So like the service of notice, there is like n number of case laws around like service of notice. You did not look at my face and say, oh, sir, you did not get my signature, you got my signature in blue pen instead of blank pen. All reasons that the notice was not served properly. But now the serving properly means what? So there is one more section which is coming up, but I will just stick to this now. So the serving is complete if they serve the notice to the SSC, and of course like we have the information technology, I think it's very small to read. But it's just the rule 5 of the Code of Civil Procedure. So the first thing is by post, by courier as may be approved by the board. And today we know everything is like once it is posted to the website, it is taken as served. And that's where they say like they refer to the Code of Civil Procedure and the Information Technology Act. The Information Technology Act says email and includes email attachment. So if there is an email which says that Principal Commissioner not digitally signed, that is also valid. If there is an attachment which says Principal Commissioner or Income Tax Officer, that is also valid. So any communication electronic is valid. And this code of civil procedure per se says like it has to mention the case, it has to mention basis what this is given and all that. This is in this section. There is one more section which is coming up to say is that in case if they had missed something erroneously, that is not a problem, still the notice is valid. So this section has very less relevance. This is only for us to understand like what is given in the Act. So this is like by post courier, such manner as prescribed by the Code of Civil Procedure. This has a whole lot of item like the which code it belongs to, the name, the case reference, the background, everything, and the Information Technology Act, the email attachments, and any other means of transmission of documents. This is the posting on the website. So everything is valid today. So authentication of notices and other documents. Where this Act requires notice or other document to be issued, so this has to be like signed. But in an electronic transmission, because that is approved, anything which contains a name itself is a valid document. Of course, in the other section which I mentioned, like anything incorrect is okay. So all that is accommodated. Even in that, if the signature itself is missing, then the notice is invalid. But here apparently we don't get such notices except for that question mark. But even if there is a question mark, I think it is once it is posted in the website, it will take benefit under the other section and become valid. Next is like to whom you will have to serve the notices. So when the SSE is there, then obviously the notice has to be served to the SSE. And there was one interesting case law where like old one, okay, like 1922 Act. So where the notice was served to the SSE's retired father, said the notice was invalid. Because the father did not know what the notice was, he did not give it to the son. The SSE had no clue of the notice. So that was invalid, but that's why I said 1922. Today it is not relevant. So if it is served, it is in the portal itself, it is valid. But just to understand the section, if it is served in your PAN number, like the address which you have latest given in your PAN, then it is valid. The communication address which you have given in your ITR, then it is valid. If you have communicated any other address, maybe in your profile that this is the address where you will have to serve the notice, that is valid. Your phone number is there, Aadhaar authentication is there. So notice is completely valid for an SSE. What would you do? You will have to serve a notice to a firm which is dissolved. I think I'll lock it for a minute. So it is there actually. So if the firm is dissolved, so like if the firm is there, then I am not worried whether the partner A is there or partner B is there, who is sitting there, whether the receptionist or the accountant, etc. If I serve the notice to the address of the firm, then the notice is valid. So if the firm is dissolved, there is nothing there, then there are like 10 partners in that firm. So when will this notice which I serve will become valid? And all the 10. Brilliant. This is exactly where all of us were fighting. But the answer is no. Even if the notice is served to one partner, it is valid. But imagine a practical scenario. The firm is dissolved just because the partners fought. No, they are not going to look at each other's face anymore. Will this partner call him and say like there is a notice? Unless they have a clause in the dissolution or retirement which says like now there is or any other liability which comes in. Imagine a scenario where they don't know that there is a liability, all clean. So suppose there is a future liability, then all 10 of us will divide. Then this partner will have all the interest to call the other partner. Otherwise, why would the partner even call? Imagine a scenario where this partner is no more. The partner's family has it. Why would they even, inform? But like any dissolved firm, it is sufficient that if the notice is given to the registered office of the firm or any one partner is sufficient. So even in the case of association, any one member of the association, the notice seems to be valid. In an HUF, if either to the Karta or any member of the HUF, notice is valid. Moral of the story is once we give the notice, it is valid. You cannot invalidate under any grounds.
Practically this will work, madam, because when form is dissolved, they will apply for PAN closure. Even then after closure also they will issue.
They will issue. And in that, like the previous section, there is the address of the SSE. In that they say like your post office address, your bank address, all those addresses are valid. So in that, even if the firm is dissolved, if the firm is dissolved or association is dissolved or HUF, there is some problem, whatever, If the notice is served to one person, then it is a valid notice. Submission of statement by a non-resident having license office. This of course like the 285, the SFT statement where we give our P&L, where our controlling entity is there, how much of shares is there. Basically this is in the next section, I'll just summarize. So if I am, this is everything emanated because of our Vodafone. So I'll have to give information on whether I am a license office and basis what, like I'm here the RBI permission approval details and the data submitted to the RBI, my financials, who's my controlling entity and what other, there's one other section, so I'm just clubbing all the three, and all the controlling entities, whichever country I have the businesses in, and how much of such revenue is accruing from India. If there is any transfer of assets, then I will be giving the percentage of transfer of assets in a form certified by a chartered accountant, and that the formula works like this: assets transferred divided by the overall assets. So thereby arriving at, if it is more than 10%, then the substantial things comes from here. And in case of the P, the license office tantamount to be a permanent establishment, then all those kind of declarations. So this is regarding the submission of statement by a non-resident having license office is apparently done as a SFT in the reporting portal. Information Indian concern in certain cases is again when they have a foreign transactions. This is on submission of statements by producers of cinematographic films or persons engaged in specified activity. So for all others, when do we file our returns? Financial year, previous year, assessment year, etc. For this is one exception where for a person who is producing a film, movie, he has to file his returns within 60 days from the end of the project. It could be like, and what are the specified activities? Cinematographic films is the movie. The specified activities are like any kind of television, the mega serials, if we can think of, or any television shows is what they've said. So it could include all the Super Singer, etc. Whatever shows. If the project is done, then we will be submitting a report. Any kind of event management, any kind of sports related event management, any kind of performance. If I am an artist, then any kind of performance which I do. So everywhere I have to submit a report. And what this report will contain is, I will have to disclose information of payments made more than 50,000 rupees to everybody, like with PAN number, etc. So, and on the other end, I just had a question when I was going through this. So, if we can just relate this to our TDS. So, in case if when we are looking at our TDS provisions, there is a tax audit which is being done. We go through all the payments, we see like wherever TDS is missed and all these stuff. For them per se, in the SFT also, for all the people who have to file the statement of financial transactions, the approval, either the censor board or they are not covered. So how will the government even have information of how many films, how many shows were produced during the year and how many are not disclosed? Now imagine the plight of the 5 crore people who received notices basis this AIS. Like just because they had one number in the AIS, it will be like 10,000 rupees interest, 1,000 rupees TDS. The person would have left, I don't want this 1,000 rupees and my interest, my income itself is less than the taxable limit, so I have not filed. But today, like notices have gone to 5 crore people, like everybody has to respond. Now to collect this particular source, of course like there is a section which says that you have to do. But what if I don't do? How is the government going to track me? I am not sure how they are going to do. Unless they have to bring the censor board under SFTs and the permission of the television serials, if there is any other particular board, they have to bring them. Only then the government will have information on how many shows, how many events have happened and how many people have not filed their returns. Imagine even the timing difference. So where in my tax audit report am I going to say like to who all I made the payments? So the idea of this particular section was, in this section beautifully it says like the government wanted, the intent of the government was to track the inflation of production of film. That was obviously not the intention. So the second line comes, the government also wants to track to who all the payment is going to go. So anything was, and initially it was 5,000 in 1922, then it became 25 and now it is 50. So the idea is who all are receiving payments. So earlier it was employees and then now they have included employee or otherwise. Any payment made to anybody more than 50,000 rupees you will have to report. But what if I don't report? There is no mechanism to catch, but like we are all chatted about it, we'll advise compliance. Remember this form also next time when you file. So this is like SFT or reportable account. This is the, sorry for the font. Is this just the banking financial transactions wherever your cash transactions are more than 10 lakhs and your credit card is more than 2 lakhs. If you're a public limited company, if you issue shares more than 1 lakh, or if you make any other expenditure, if you're an RBI, then if you issue bonds more than 10 lakhs, all these things are being reported. What is not being reported is our status of rice dal provision status in our house is not being reported in the AS. Rest everything is reported in the AS. But where they have to catch, probably they are missing. Even in this TDS, when I was just mentioning, now there are like a lot of prosecution notices which are being issued. The session before me, I think it was penalties. So 276B, there's so much of prosecution notices. The two conditions are either like 6 months and 25 lakhs. Imagine a scenario where I am deducting tax, I am not paying tax, I am not filing returns. Now the 6 months, 25 lakhs, etc. and all, how you are going to be able to find? Only when I file the returns. If I don't file the returns, how will you even know? I am giving the date of booking, date of recording, date of payment, date of challan, mapping, everything I am doing. Only because of that you come to know your CPC beautifully picks outstanding more than 25 lakhs, outstanding more than 6 months, 1 AI, 1 click, you said 276B notices. But what if I don't file at all? There is no mechanism in the government to track how many people have filed their how many people have collected their TDS and not remitted to the government, not filed the returns. The moment like somebody wants to file, we say 200 rupees per day, they run off. Say like, okay, I better not pay, I'll see when it comes. On the other hand, the government says like, if there is a tax deducted, then the SSC cannot be penalized twice. So you give that benefit to the SSC. But the catch here is, practically what happens is, we go show the section, circular, everything. But the assessing officer says, please read this line. The assessing officer shall verify and give the credit. What is this verification? Where will he even verify? See, I told him like, for verification, I am giving you my Form 16 original, I am giving you my bank statement. So whatever is there in my Form 16 perfectly matches my bank statement. I can give you month-on-month salary slip where the tax deducted is shown. So he says all that is fine, but where is the revenue to the department? Tomorrow if I am going to give you credit, you are now asking me like, do you want the SSC to pay 60% tax? Similarly, do you want the government to give you like extra credit? So it's actually the vice versa for them, right? And one person actually brilliantly handled this in Chennai. So when the notice came, the assessing officer discussed this case with me. So 276B, same scenario. He went, he saw, okay fine, now we are looking at 6 months at 25 lakhs. He went back, he downloaded the console file, changed all the date of booking, less than 6 months, uploaded. Now it is not more than 6 months. 25 lakhs you can't do anything, but the condition is and. 25 lakhs and 6 months. Now it is not 6 months. I am failing in one condition, you can't give this notice. And if we go back to any other statute which says like, how can you book an expense late? It doesn't work, no statutory regulation governs me as to when I have to book my expenditure. Unless it is, skipping between the financial years, then I'm okay. Like if I'm receiving a bill in April, I can still book it in March. Even in GST, like if I miss taking a credit in a financial, I have time till October. So there is no regulation to say like if I receive a bill, I have to book it within 7 days. Brilliant. But the department till today has no mechanism to track as to who collected and not paid. It is the poor SSCs on the other hand who have actually given the TDS credit and still struggling to claim. So back to this on the SFTs, reporting requirements of international group. This is exactly where I covered this along with that, and publication of information respecting certain SSCs in certain cases. So in case if the department feels that it is important to disclose certain information in public, then they have the powers to do it, to put your paper in the newspaper. Tomorrow you cannot go and file a defamation case. So this is the protection against that. Appearance by registered valuers in certain matters. So this is nothing but a kind of power of attorney, just like we chartered accountants, we go and appear. If the case demands a valuation professional, then the registered valuers can go and appear as to how they arrived at the value, etc. Those technical things they are allowed to appear. Appearance by authorized representative. This is one interesting thing. So this authorized representative, all of us take power of attorney in 100 rupees stamp paper, we go give it. Of course, there are like multiple stamp values prescribed in the section, starting from 20 rupees to 200 rupees, starting from 80 rupees to 200 rupees for different things. And there are interesting case laws to say that after giving a power of attorney, that you know all statements made by the chartered accountant, all documents produced by him are binding on us. That will be the last line of any power of attorney. So after giving all that, there was one assessment where the assessing officer added back 15,000 rupees. And the the authorized representative agreed to it. Then the assessee went on to fight like the authorized representative does not have the right to accept. He has the right only to represent and tell what I am telling. He does not have the right to make decisions. So then it went on to the court to say like if you give an open power of attorney that whatever he does is binding on you, then it is binding on you. And there were like case laws in the earlier 1922, it was like very interesting. There they said like graduates can appear, and there were case laws to say that graduate from this university cannot appear. All these things they were knowing, and there is a big advisory to state that I felt is relevant even for us today. So that advisory says that though a chartered accountant or a lawyer is appointed by the SSE to protect the SSE or to tell the department as to what the SSE is telling or what the SSE wants to, we have a moral responsibility that we don't misrepresent the facts or conceal the income of the SSE. If that be the case, then the department can take disciplinary action against us as professionals, both for the lawyers and for chartered accountants. So when we are presenting the facts, we will have to present the right facts, and at the same time, we are not obliged to submit all the information which we have in hand. So it is like you should not intentionally hide or mislead the officer. On the other hand, you are not obliged to give what all you have in hand. Moral of the story is, if the officer is not smart enough to ask you the right question, you are okay not to answer the question. So that is the idea of appearance by the authorized representative. So this is the list of who all can appear as authorized representative. Rounding off of income, both rounding off of refund, both this I'm sure like all of us know, and today like it is completely irrelevant. Everything is like in Tamil is system driven. So it is like just that now we are going through this section, we'll have to eliminate the paisa completely, even if it is 99.9999 paisa, then we'll remove it. And if the rupee is more than 5, round off to the nearest 10, less than 5, round off to this side. That is the receipt to be given. So this I think came from 1975. So any money received by the department, they have to give a receipt. But just imagine a scenario where like same TDS etc. where we applied, we got the challan, we missed something, but the challan was only the bank challan. We did not receive a receipt from the department that we have paid the TDS. Now you have this challan etc. So years back, this is there from 1975, that's exactly why I mentioned the year. But in between, there are so many issues in the TDS or so many issues even in the income tax per se, where the SSE has only the challan. Earlier, we did not even have this mechanism of the TDS credits being reflected in your 26 years, whatever we pay. So that way, I am sure like this was not properly implemented. It was only a section. We never had any challan, any receipt from the department. The only receipt we had in hand, even to say like 2003-4 demand, thanks to our finance minister, she removed all those old demands less than 10,000 rupees in the February budget. So this was all because of the transition of like ITD to ITBA to now this version 2.0. In the ITD, there are like old demands, then the poor senior citizens, just I'm referring to the senior citizens because they are the people who are mostly worried because of these demands. So they went, they gave the challan, etc. Then the officer also nullified the demand. So he gave credit to everything. Then when they shifted the system, there was a system error, all the demand again surfaced. So now this is the third time they are moving and again the demands surface, and now it is not the notices, not this, they are getting phone calls. Early morning when they are reading the newspaper, they are getting phone calls, we are calling you from demand management center, you please pay this 50,000 rupees. So they get panic. So that's the reason again, this is, I'm sure like if we had any receipt from the income tax department, that would have been more authentic. But today, of course, we have credit, etc. Earlier, I think only the challan was the only document which we had in hand. Indemnity, this is like every person deducting, retaining, paying tax in respect of income belonging to another person shall be indemnified for the deduction and payment thereof. This is an indemnity which is given in terms of the prosecution, etc. Again, like we'll have to apply to the commissioner and all that. But this was more to bring in all this voluntary disclosure schemes. So the government, if they feel that somebody is not disclosing enough income, etc., and they want them to disclose, and the only way out is to give immunity from the prosecution. So 291, immunity from the prosecution, and they can give immunity from the prosecution. They can say like, okay, fine, whatever you did in all your karma is washed up. Today you come and disclose. I will give you blessing. You are completely indemnified from all proceedings, prosecution, etc. So only to bring in those kind of schemes, this indemnity has been brought in. And cognizance of offences, of course, like this was brought in, like I'm forgetting the name, some Vagesh committee or somebody. So they said like somebody who has done this economic offences, they cannot just walk away. So like you will have to treat them in par with criminals. They have to be penalized and all that. So that's how the liberty was given to the judge who is making the trial, that economic offences need not be treated lightly. So that like people are aware that they cannot make these offences anymore. And of course this will not apply to a person less than like 18 years of age. And of course like this is the one. Notice deemed to be valid in certain circumstances, 292 BB. So we saw like notices, it has to be served on the SSC, and dissolved firm also, like you will have to serve like one partner, one director, it is deemed to be served. Even if I make some mistakes in serving the notices to, according to that particular section, not signed, not in the email, not posted, not delivered, not received the signature, acknowledgement, etc. Whatever mistakes I do, all that is indemnified, blessed by this section. So here, if there is any clerical mistake, for example, like this one case law, which says like the assessing officer gave a assessment order with an attachment of the computation of income. The order was signed, duly signed. The computation income was not signed. So the assessee went on to say like it is not signed, and you cannot give me an order randomly that I have to pay 1 crore. You have to substantiate, and the substantiated document is invalid. Therefore, I will not pay, not a valid notice. So that was actually blessed by this section. It's like you will have to agree to it. It is a valid notice. And in the case of there are two cases. Like one is like a widow was representing the case on behalf of her husband, and there was one other proceeding which came up, and apparently a notice cannot be served on a person who is dead. Right? So that is invalid. But now that the wife went and represented and she is aware of the fact, this notice was deemed to be served. So, and this is actually a case law in the previous one also, in terms of the serving of notices, where they say like when you are there and you are made aware of. So forget like your PAN number is wrong, or your email is wrong, your address is wrong, everything you changed. But it so happened that you went to the income tax officer and you received the notice, then that deems to be a valid notice. And in terms of this authorization as well, so in case if I am like representing my client, duly authorized by the client, then am I actually authorized to receive the notices? So here it happens in our cases also practically, like for all our clients, I'm sure like all of us would have started that homework now. Today we go every day, like at least once in a week we say like please open all the accounts and see like at least the problematic companies, see if there are any notices, right? Because we don't have any other mechanism to check whether there is a notice, and the notices are pushed like early morning 2 o'clock, 3 o'clock, and you're supposed to answer next day 12 o'clock. The hearing is like 3 o'clock. That's how the notices come. So all these things, like if at all like there is a mechanism that as an authorized representative, if I can receive the notices, then things will be much easier because we are tracking it. But for that, you will have to be specifically authorized. So if I am not specifically authorized, then I am not supposed to receive. Like imagine a scenario where I am generally authorized, like whatever statement made by me is binding on the SSC. So I am going and representing. Suppose the notice is given to me. I have signed, received on so and so date. That is not a valid notice. Basically because I am not authorized to receive the notices. Therefore this communication is void. So they should have actually served the notice on to the client. So having said that, any other clerical errors which you do, it could be a address change or a name, incorrect name or a spelling, or maybe like even the section is incorrect, all those things are blessed by this section. So moral of the story again is, if the department gives a notice is valid. So presumption as to assets, books of accounts, etc. So when there is a search 132, 133A, whatever action happens, and if you are in possession of some assets, be it gold, property documents, whatever, the basic presumption is that particular asset or document belongs to you, unless I am able to prove or somebody else gives a declaration that it is my asset, it belongs to me, and for whatever reason I had given it under the custody of this particular person, etc. in writing. Obviously then I am supposed to answer as to how I got that asset. So now that one person is under trouble, so he has 99 problems, this one problem additionally let him handle. Or if I want to invite, I have to give declaration. If it's a genuine case, yes, I can give a declaration that this particular asset belongs to me. Maybe like I pledged it to him without any document based on an oral contract which is still valid. So based on all this, I can say that that particular asset is mine. But unless that happens, anything which is in your possession, be it books, documents, not signed by you, not resembling your handwriting, not like your signature, irrespective of whatever, if it is in your possession, the basic presumption is everything belongs to you. After that, you will have to go and prove that it is not yours. So an authorization and assessment in case of search or requisition. So this is from the officer side. So in case if an officer is authorized, then there will be a team of 300-400 people who come for a search. It is not necessary that they have to mention everybody's thing for authorization. One authorization is valid for them. So everything is easy for the department side. And this is just to give exemptions for extraction of mineral oils, etc. Now that the government is doing a lot of initiatives in extracting mineral oils, in extracting petrol, gems, etc. Where they have given contracts to, they are inviting people internationally, they can come do the mining. If they don't find anything, cost is theirs. If they find, then the project cost is monitored by BPCL or authorized companies. Until you break even, you take. After that, it belongs to the Indian government. So the government is encouraging a lot of those things which involves huge capex, where the Indian government cannot afford. So this is one such initiative to give exemption to them. And in case if any kind of exemption which they give has to get the blessing of the central government or the houses of the parliament within some date, some particular date, and I am not able to get, what happens? Condemnation. Condemnation is valid. Phaseless approval or registration. So this originally, like even the penalties, like they would have said, you would have seen, like it is just to widen the tax base, it is to make the maximum out of the technology and to curtail the interface between the SSC and the assessing officer. So this is just to optimize the resources, etc. This phaseless was approved. And act to have effect pending legislative provisions for charge of section 194A. This is 294A. This is like when a act has been enacted, some charge of income tax is brought in, and that is not approved by the parliament. It does not come in as an act. It is between the bill and the existing act. I can use whichever is beneficial to the SSC. So in case if there is a delay. And power of the board, unlimited power. So it is like all other things I just pasted the section because hardly we get to read these sections, so I thought it will be good for you to just go through the sections when I just explain. This one I just took the gist because they have for rule making, they have power, income determination, calculation methods to identify what is perks, what is not perks, how much of interest to collect, when to collect, how can I punish you, whether to do it faceless or online. They have unlimited powers. So it's like, and even if they don't have, they will create one. So there's no point in reading this section, and I couldn't find anything to say like the board did not have the power to do this. So none of such instances starting 1922. So I'm not sure like except for the CA final examinations, I don't think you'll have to even worry about this particular section because they are blessed with all powers. Estimation methods, retrospective effect rules. So this is the key. But read the section. It's like the board can make rules with retrospective effect, but cannot unfairly disadvantage. Like it cannot be an unfair disadvantage to the SSC. But who will decide on what is this unfair disadvantage is the question. They can make retrospective amendments. That is there. And whatever they make, they will obviously say it is not unfair disadvantage to the SSC and the revenue is at loss and all these things. And rules and certain notifications to be placed before the parliament, and obviously like whatever rules, notifications etc. they do, they will have to get the blessings of the parliament. In case if they are not able to get, they can get condonation. Repeals and savings, this is for the old act. So if all that is like repealed, and whatever effect you have because of repealing the old act, or that you have the savings. Section is still there but not relevant though. Last one is power to remove difficulties. Actually it is creating difficulties. So in case if there is any difficulty, of course like they can giving view of explanation, proviso, circular, whatever. And this is also an ancillary limb to that superpower they have under section 295. So that's it from me. Thank you so much for the patient listening. We'll be happy to discuss and I think I completed it on time, though I came late. So if there's any questions, we can discuss. Yeah. After 295, nobody wants to talk. All superpower. Whatever you do is right. What I have only option to just listen and abide. What is there to ask?
Whether it applies to legal representatives, successors, father, there is children also it applies.
Which ones are the notices and the assessments? Yes, sir, that's nothing to do with 295. Otherwise, like if I am a legal representative, I take all their assets, then obviously like 281 also comes into play because the assessment is already in process. So they have the right to attach that asset, and it so happened that the person passed away and there is a legal inheritance. So that will become what they can attach.
Wherever assets is transferred by, then only it will be.
Yeah, intentional transfers, gifts were also revoked. There are case laws where gift was in fact to granddaughter. That was in fact revoked and taken. So in all those cases it is there. But there are other case laws to say, like I was also mentioning when actually the widow went and she had knowledge of the notice, so the notice was held valid. But otherwise, like there is no mechanism to send a notice to a person who is no more. So that way the proceedings cannot happen. It is invalid. But if there is a legal inheritance, and logically, if you are inheriting the assets, then you have to inherit the liability also.
Madam, in case of a firm dissolved, you said that we can go to the partner. In case of a company closed,
Director shareholder. Like what they say is, if the notice is served to the address of the company, it is a valid notice.
Even after company is closed. Then
there is no logic. Like if it's a rental premises, then the company will shift. Nothing will be there.
Many times we read that shareholder is limited to only share capital liability, but it is not so. I think so.
Yeah, they can issue the notice. See, like that is limited liability and all comes later.
Okay.
This is restricted to the validity of the notice. So I am receiving the notice, and what I will do with the notice, how I will respond, that like all other sections will come into play. So it's like if I am a shareholder, obviously like my shares are, my liability is limited to the investment in the shares. Even if I am a director, unless like I prove there's a case, like Varun sued. So there was a case where the notice was given against the director for non-compliance of the company. So the director said, I have done enough diligence, enough mechanisms in place for the compliance to happen. And just because I am the managing director, I am named as a managing director, this cannot come directly to me. Because there were so many mechanisms which
The
I did.
person who is charged for tax, then he would be responsible.
Correct. And there also there is a catch in the tedious prosecutions. It's a kind of pushing the ball. So in the notice per se has to come to you. So the 235 they send the notice that you are the authorized person, or you are the person who we are like trying to fix you, like you are the authorized person. And if you say that I have actually employed a chartered accountant, a CFO, who has signed all TDS returns, etc., and if you track the email communications, not even the payment proof comes to me. So I have nothing to do with the TDS payment. So if there is a delay, then it never came to my attention. So that can never be proved. So it will be like only the, and like how will you go and suppose the CFO left this company, he joined some other company. How can you go and prosecute another company? It doesn't happen. Like there are case laws for and against that. Okay, I think the next speaker has come. Thank you so much for the patient listening, and I once again thank the Bengaluru branch of SARC of ICI for the wonderful opportunity. Thank you.
Thank you, ma'am, for the rules here. On behalf of ICA Bangalore branch, ICA Chandrakash, managing member, thank you for the wonderful session and present amount of as of gratitude. Next session, we have the speaker. For next session, I request C. Siddesh to come to the dais. I hope everybody is aware of C. Siddesh. So without introduction, I am handing over the session to him. Thank you.
I got an opportunity to deal with the section 68 to 69D, 115 BBE, revisit to 2.0 this session. Again, one more opportunity to revisit section 68 to 69D, 115 BBE. Today, 3 days back, when Kota sir called me to take a session on important case laws preferably, Kota sir told me that I'll be sharing the stage with the Shankar sir. The very moment I heard Shankar sir's name at night, I asked him whether I had to come here as a moderator than as a speaker. So anyway, then Kota sir day before yesterday told me that it was only me who is going to be there on the stage. Then I got to know that my professional colleague, is also there among the crowd. So he might as well equally qualified to be there on the stage. But anyway, my attempt today, members, is to touch upon those rulings rendered in the recent past, preferably by Honorable Supreme Court and High Courts, having very wide ramification. The landmarks ones which are on legal issues, preferably. So case specific facts and all, I'm sure CAs are experts, having been exposed to the accounting aspect of the client, having undertaken audit assignments, having been exposed to the client's business, we are the best when it comes to factual matters. But I'm pretty sure, at least when it comes to my practice, having not done LLB, I may be on back foot when it comes to legal grounds. At times, instead of breaking our head over the facts of the case, finding it very difficult to explain to the bench members or CIT, at times, at least I find it easier to win the easier battles one first and then take on the facts of the case. So my attempt today is to focus on the legal grounds having all pervasive effect. So the slides are not changing. First off, I'm pretty sure members here are exposed to section 271 subsection 1 within bracket C. Till assessment year 16-17 we had this luxury of Karnataka High Court ruling, wherein it was held that when the charge is not specific, whether it is a case of inaccurate particulars or whether it is a case of concealment, if it is not specific, we had this luxury of anyway. Karnataka High Court, SLP against Karnataka High Court was dismissed, and because it was vague, we were getting orders in favor of assessing that penalty is not tenable. In a very similar fashion, Manjunath Cotton Green, in a very similar fashion, we have section 270 capital A which has come into play from assessment year 17-18. 270 capital A also has subsection 2 and subsection 3 dealing with unreporting of income. Subsection 8 and subsection 9 dealing with misreporting of income. I'm pretty sure you had a session on penalties in the recent past. If that is not enough, subsection 9 of section 278 deals with close to about 6 limbs under which it can be held as misreporting. So two levels of complexity is there, 2 levels of maybe vagueness can be explored. The question to the learned audience is, can we draw analogy from the previous instance? Cases dealing with the 270 on 1C to this section. The answer is there on the slide. No brainer, as long as the notice is riddled with vagueness. Yes, there have been a lot of case laws. One in the recent past is GE Capital, Delhi High Court. Prior to that, the most landmark one in the first instance is from Schindler Electric. That is also there. So in this case, what was interesting is the moment they got an immunity rejection letter stating that immunity application under section 270AA has been rejected because the penalty was initiated for misreporting. That is when the assessee knocked the doors of Delhi High Court. The assessee is yet to get a penalty order, but still they went to High Court, approached High Court, and High Court was kind enough to state that the notice was initiated for both the offences, misreporting as well as unreporting. That is the reason 270A notice was held bad in law, and consequential observation was also there in the next paragraph, wherein for not mentioning the specific limb under section 270A subsection 9, it was held that even the rejection immunity is also bad in law. The relevant observation of the High Court is there on the slide. The one that has been highlighted can be emphasized. No finding which may be viewed as indicative of contingency spelled out in clauses A to F of section 270A subsection 9. It was so ultimately held that penalty cannot be mechanically commenced. So I'm starting off with a simple case so that complexity can increase down the line. There is also one more rendered just about 20 days back, 31/5/2022, Prem Brothers, again at Delhi High Court. Specifically, this is the second level of complexity. So it's not just misreporting versus underreporting. Even under misreporting, they have to specify as to what is the exact offense. Only then start the penalty proceedings, only then levy the penalty. You also have luxury of the Chennai ITAT, again just about 20 days since it has been in place. So members, I can think of close to about 6 instances where I can dispute the penalty notice issued under section 270 capital A. One is if the notice mentions that it is for underreporting and misreporting, I can challenge on the basis of vagueness. The second is if the notice mentions misreporting or underreporting, or maybe misreporting / underreporting, I can still challenge the penalty. Forget the merits of the case. I can still challenge it on the basis of legal point alone. The third instance, or rather the fourth instance, is when the exact limb under which it can be levied under section 270A subsection 9 is not mentioned. I can still challenge. Am I right? Based on the rulings that we just referred. The fourth instance is it is initiated for underreporting but ultimately levied for misreporting. So this is the fifth instance. Or initiated for misreporting, vice versa, levied for underreporting. That can also be challenged. Karnataka High Court, Shema holding, if I'm not wrong, that's the case. The last sixth instance where I can challenge is the rejection of immunity alone can also be challenged. This was not there in the erstwhile regime, erstwhile section that was being pressed is section 271(1)(c). Immunity is there in this section 270 capital A. Am I clear so far, members? Yes, anybody? I'm more than happy to entertain question. Anybody? Sachin sir. If not for anything, I would like to thank Kota sir. I would like to thank Bangalore branch. I would like to thank this crowd for having made me sit and read this case law multiple times. The ruling in the case of CIT versus Prakash Chand Munia, what a beautiful ruling it is. What a nice finding by the honorable judges. It was an absolute thrill, the beauty of the arguments in this case, which made me go back in time. 1961 is the case that I am referring to. Even before Income Tax Act came into play, 1961. This ruling was on erstwhile Act 1922. Assessee who is into trading of dates was subject to seizure, confiscation of the dates. That is when he had to pay penalty to get the goods released. The question before the court, a 3-member bench, was whether this particular penalty is allowable as expenses. Very simple question. The larger question is whether the expenditure incurred for infraction of law during the course of legitimate business is allowable, or if it is illegitimate business, is it allowable? That's the question. The Honorable Supreme Court larger bench has pronounced the ruling in favor of department by holding that the penalty that you are paying is for infraction of whatever law it may be. It is not a commercial loss during the course of trading. It is a coincidence that to levy the penalty, the proceedings were initiated in rem. That's the phrase, it is in rem, against the goods, not against the person. Because that was the finding. They said it's a coincidence that it's related to business, coincidence that goods are seized, coincidence that you are into trading of the same goods, but still penalty is not to be allowed. That was the ruling. Very beautiful ruling. But anyway, that's not the focus today. It is focused on Prakash Chand. But let's bear this in mind. The second important case on this particular matter is from PRR Singh, yet again a Supreme Court ruling. Unlike previous ruling, it was 3-member, this ruling is a 2-member bench. The assessee was involved in smuggling of currency notes. Yes. Why smuggling notes? Larger profit. If you actually ask me why smuggling notes, because deduction can be claimed. If you are smuggling notes, if the notes are caught,
that loss was held to be allowed. At least from Income Tax Act, instead of suggesting get into ATC investments, whatnot, I will suggest get into smuggling, so that losses are allowed, at least based on this ruling. But anyway, hold on to the advice, advice may change. So PRS saying it was so held that the confiscation of currency notes was loss occasioned in pursuing his business, that is loss which is sprung directly from carrying on smuggling, allowed to be claimed. So we are dealing with losses, we are not dealing with expenses. TA Qureshi, I do not remember anything from my IPCC. I do not remember the case laws that I read. We had a separate case law books, whatnot. But I still remember TA Qureshi as if it was yesterday. TA Qureshi was involved in heroin business, drugs. And it was obviously seized, confiscation. We already had a precedent, PRR Singh. The Supreme Court just followed PRR Singh, allowed the claim of losses. Well, what is important, this is the extract, this is not my words, this is the extract. The reason why I put it in bullets is for the sake of convenience. The High Court, this is observation of Supreme Court, the High Court had adopted emotional and moral approach. What Chaitanya sir has taught me is morality and equity. It's different from taxes. So Supreme Court did observe that let's not be emotional. It also observed that High Court was right in opining that assessee was committing a highly immoral act in illegally manufacturing a certain heroin. However, cases are to be decided by court on legal principles. End of the day, profit, whether it is derived from selling heroin or it is derived from selling a laptop, doesn't matter. End of the day, at least in income tax, tax is on the net income. That is what the first fundamental principles I had learned from my IPCC teacher for income tax. With respect to this explanation, we all know that explanation is there on section 37(1), explanation 1. It states, anyway, we will look at it. Explanation 1, despite that it had come into play from 1998, it was so stated that explanation 1 is dealing with expenditure and not the losses. So that is how the court neither relied upon explanation 1 nor on the Haji Aziz case law. End of the day, it was so held that commercial principles compute only the profit, tax him only on the profits. It is now time for us to refer to section 37 subsection 1. I'm sure you already had a session on this. My focus is only on a couple of words here. Subsection 1 starts off with any explanation not being XYZ. So it is, any expenditure. And explanation 1, it also states for removal of doubts, it is hereby declared that any expenditure incurred by an assessee. So again, the focus is on expenditure. What we are dealing with is, what is that we are dealing with? We are dealing with losses. It is important to remember that explanation 1 has come into play from Finance Act, by Finance Act number 2, 1998, with retrospective effect from 1961. So even before this explanation, we had a 3-member bench of Supreme Court, Haji Aziz, selling dates, wherein the losses were disallowed. We also had PRR Singh, we also had TA Qureshi acknowledged explanation 1 and state that not applicable because expenditure versus loss. So then comes this ruling Badridas Daga. Very important members, very important. 19.2 is the para straight from the ruling. The court went on to hold that, so this was the case, to take a step behind, this was the case where the employee of the company ran away with the money, embezzlement with the cash. The question was whether the cash that is being lost is allowable as deduction. So that is when the court held that. Court went on to hold that the payment of a salary to an employee being paid for the purposes of business is deductible. So when salary is deductible, any losses caused due to that salaried employee should be considered to be incidental to the business. So losses and expenses, losses and expenditure were put on the same footing. And the next sentence which is put in red is also of importance. Similarity between the test laid down for deduction of an expense with respect to the residuary provision, similar to section 37, and the test for deduction of loss. So test for deduction of expenses and test for deduction of loss is the same under the erstwhile provision. So that's what was held by this ruling. So now in the case of Prakash Chand, the erstwhile ruling of the High Court, which was being appealed against, has been set aside. The Haji Aziz ruling, person who was selling dates, has been followed. PR Singh has been disturbed. Qureshi has been thrown away, and few more rulings have been followed by us. So what was held here for a very first time, I do not remember reading a ruling where the ultimate conclusion is the same, that losses are to be disallowed. But there are two views, one from Justice Yamar Shah, who is known to author very good rulings on income taxes, another from another judge. What Justice Yamar Shah had to say in this case, at least in my humble opinion, limited knowledge of income tax, I only have 10 years of experience. Sir Justice may be having experience of my age. So what he had to say is, he distinguished PR Singh, he distinguished T.A. Qureshi, he followed Haji Aziz by stating that PR Singh and T.A. Qureshi were into illegal business and the losses had arisen from illegal business. However, in this case, a little did I touch upon the facts, in this case, the assessee was into silver trading. To get more profit, larger profit, he engaged in smuggling as well. So he was in legitimate business, deriving profit from illegitimate business or deriving losses from illegitimate business, not allowed. Look at the absurdity here. The reason here is, if I engage in smuggling, income losses allowed. PR Singh and Qureshi, if I engage in a legitimate business and income losses for infraction of law, not allowed. Anyways, we also have better reasoning. We also had a second judge on the bench, Justice M.M. Sundaresh, refused to follow what was held in PR Singh as well as Qureshi by stating that those rulings have not distinguished a larger bench. Haji Aziz was a larger bench, 3-member judges, 3-member bench. Because it had not distinguished, it was held to be per inquirium, which means without application of mind, without proper thought. It was also held that expenditure in the larger context, if it is considered as a genus, the losses is a species. Every loss for that matter may not be expenditure, but expenditure definitely includes losses. The word any expenditure referred in section 37, it also sweeps, it takes into sweep, Biradari Das, expenditure takes into sweep the losses. So that was a ruling. While passing this ruling, the judge also remarked, very nice example was given, in the view of explanation 1. Explanation 1, now it is very clear, thanks to this ruling, it includes not only expenditure but also losses. What was held here, the nice example that is cited is, if I have to go by T.A. Qureshi. T.A. Qureshi said, explanation 1 is of no relevance because it only deals with expenditure and not the losses. Suppose I am a manufacturer of heroin as a drug. I incur expenditure, raw materials, labor, whatnot, to manufacture a drug which is an offense. So that expenditure is disallowed thanks to explanation 1 to section 37. Just only going by T.A. Qureshi. And then that ultimate product is seized by the police. Going by T.A. Qureshi again, that the loss is not to be disallowed under section 37.1 because it's a loss, it's not expenditure. So this beauty of the ruling, beauty of the absurdity of the previous ruling was highlighted by Honorable M.M. Sundaresh. Hope members are able to appreciate. Yes. A reference was also made to my favorite section 115 BPE section, which is favorite of all assessing officers. 115 BPE in my previous session on this very same stage, subsection 2, there is a bar on claim of expenses, there is a bar on claim of deduction, there is a bar on set-off of losses. What is barred by way of a set-off of losses, which was a phrase which was inserted by the Finance Act number 2, 2016, not number 2, just Finance Act 2016, is only set-off of losses. What is implied here is expenditure included losses in the first instance. So imagine a case where you are found with a bullion, gold 1 kg. Section 69 capital A is applicable. Imagine a case where it is seized by, the moment you land in Bangalore airport, 1 kg try to come out, seizure by customs authority. So this 1 kg, okay, make additions, can I claim losses? Anyway, look at the double whammy. So on one hand you're caught with gold, you lost it, and then there is addition, and then there is section 115 BB subsection 2, and then there is 37 explanation 1. So that's why SSCs, they just have to forget that it belongs to them. I had an SSC in the recent past. I refused to take this case. This person was with the MNC acquisition department, procurement department, so he was kept very happy. He had kept amount to the extent of 2 crore rupees at house. A salaried employee, his father is a government employee, retired. So this money was stolen. Because people were aware that he is into all this extra activities, extracurricular activities. Money was stolen. He reported to police. Police managed to recover within a week. I don't know if it is there in newspaper. Police recovered 1.6 crore. 40 lakhs was up in smoke. The case that had come to me is not police case. I don't fight criminal cases. I only fight taxes. So the reference was made to DDIT investigation. Even today in newspaper, I'm pretty sure 70 lakhs and 40 lakhs somebody had got a loan, and reference is being made to income tax officers to find out the source. Where on earth, how on earth, associate who is not engaged in maybe petroleum, who is not engaged in restaurant business, how on earth can a person generate 70 lakhs? Anyway, the client, money is recovered, police has recovered the money, it is not with income tax. When he will get it, he just wanted me to tell the date on which I can get the money back. So I said, I'm not qualified enough to fight your case, given these sections. Am I clear, members? So we are done with this. Since it was complete, please, sir.
The last year, expenditure is not allowed in this illegitimate. For the losses can be because the expenditure only will result in losses. So both are not allowed in this illegitimate.
Yes, sir. Whether it is legitimate business or illegitimate business, whether it is a loss or a expenditure, not allowed. If it is because of infraction of law, if it is a penalty, which is covered under 37(1), explanation 1. My introduction has come now. 271(1), 271(c). We looked at 271(1)(c). This is 271(c). It appears to be no-brainer, but let's remember the fact that it has travelled to Supreme Court. Yes, members, it has travelled to Supreme Court. 271(c) is for failure to deduct taxes. At least 271(c). Subsection 1, clause A is dealing with failure to deduct taxes. Clause B may deal with deduction and payment, but we are only focusing on clause A, which reads as that if a person fails to deduct the whole or any part of the tax as required, he may be invited with penalty provisions. This is what the section is, but again let's remember the fact that this matter has travelled to Supreme Court because we had an adverse ruling of Kerala High Court, a far simpler ruling. Penalty provisions, strict interpretation. Don't say a word more, a word less. Read as it is. So US Technologies case, it was so held that penalty may not be levied, but the assessee may be invited with interest under section 201(1)(a) and prosecution under section 276(b). I'm sure Sachin sir is exposed to this case, a case which shook the transfer pricing fraternity. Soft brands, Karnataka High Court. With respect to TP issues, members, the question was whether the matter can reach High Court. As we all may be aware that the moment a case is selected for scrutiny, if there is any transfer pricing provisions, transfer pricing applicability, The case is referred to transfer pricing officer. Limited review given to the transfer pricing officer is to determine ALP and send it back to the assessing officer. The moment it is sent back to the assessing officer, he passes something called as a draft assessment order. Then comes two choices to the assessee. One is, while it is a draft, he can approach a DRP. DRP does the thing for 9 months and sends it back to the assessing officer, called as the directions. Based on the directions, I can go to ITT. ITT, and I'm pretty sure we can go to ITT. The second option is, while it is in the draft stage, just hold on to it, accept that you want to go to CIT or accept the order. Acceptance does not mean that you cannot file appeal. Acceptance means only the draft order is accepted so that he can pass a final assessment order, which can directly go to CIT appeals and then ITT. Till ITT we are quite clear, but section 260 capital A, the right to file an appeal. Assessee inherently does not have right to file an appeal. The right has to be, it's a statutory right. Unless law provides for it, you cannot do it. So for example, section 270 AA, rejection of immunity application, you cannot file an appeal before CIT. You cannot file before ITT. You can just go to High Court. Similarly, the determination of arm's length price, ALP, involves a lot of things. For example, it involves a selection of comparable companies, whether Infosys is comparable to my operations, I being a IT company, whether Infosys, which has got turnover of 60,000 crores or 1 lakh crore, passes through the filter of 1 to 100 crores which I have applied in my case, whether profit level indicator that I have computed in my case, the ALP, the margins that I have computed in my case by disavowing certain items is a question of law or a question of fact. An appeal can be filed before High Court only if it is a question of law. That is what is there in section 260 capital A subsection 1. Appeal can be filed only against ITT orders, subsection 1. So the question before the Karnataka High Court in the case of soft brands is whether the decision of tribunal on transfer pricing issues, determination of ALP, which is very factual, whether this can be carried to High Court. The Honorable Karnataka High Court recent past 2022 ruling, it had held that it cannot be done. ITT is the last fact-finding authority, and whatever ITT holds, it's full and final. That is when the matter travelled to Supreme Court. Saplabs, the first name on the list of advocates who have represented this case is Chaitanya sir. It was so observed that while determining ALP, there are certain sections, certain rules, limited number of sections, 6 or 7, 92 to 92F, rules 10A to 10E. These are the only provisions applicable. As long as determination of ALP is in compliance, in accordance with the sections and rules, fine. There is no question of law, no appeal. But if it is de-horse, if it is without having regard to those sections and rules that I mentioned, it is perverse. It is perverse. And the third sentence on the slide, members, it may be considered as a substantial question of law. What with respect to perversity of fact is a question of law itself. Very beautiful ruling. So now the High Court judges will decide whether a turnover filter of 1 to 200 has to be applied, or 1 to 190 has to be applied, or 1 to 2000 has to be applied. Now the High Court will sit and decide whether a company is comparable to me. I don't know how the transfer pricing, which is riddled with so much of subjectivity. You feel that 200 crores is appropriate, I feel 200 is not appropriate. Now High Court's feeling has to be taken into consideration. It has opened a gateway of litigations. Let us see what happens, members. Anyway, at least before ITAT, if you are having an adverse order, you have a hope before other authorities. So far, any questions? I'm more than happy to entertain. I'm sure Sachin sir will agree. Jurisdictional assessing officer versus faceless assessing officer. Not almost all, 100% of the notices that I have received after this date, the date that is referred on slide first point, notification dated 29/3/2022, that is when the faceless assessment appeal, all those schemes were put as a notification. Almost all the notices that I have received, 148, capital A clause B, which is a show cause notice. 148 capital A clause D, which is an order before initiating reassessment, and also 148. These 3 documents which are received from the department for any reassessment. This is a company from an officer who has got a face, who has got a jurisdiction, who has got an address, from a jurisdictional assessing officer. But section 151, we also have 144B, we also have other sections. Section 151 clearly states that there is going to be a notification which is going to be issued for, it will serve certain purposes. What purposes? Couple of things listed on the slide. It will eliminate the interface between IT authorities and the assessee for reasons best known to everyone. It will bring about automated allocation of cases based on risk management. Many of the purposes are there in the Act. So with noble intentions in mind, they made it compulsory. 151 capital A read with notifications. Notification came in later. 151 capital A came during the peak of COVID, 1st November 2020. Yes, members? Despite that, they are getting orders and notices from judicial assessment officers. The fate of all the notices received from this date to till date hangs in balance. Am I right in saying this, members? Courts have very clearly, in the case of Ram Narayan Shah, yesterday when I was trying to rehearse the presentation, that's when I stumbled upon a small joke, not in right taste, but the necessity of planting a joke in an otherwise a technically heavy session. I learned it from Chandrasekhar Shetty sir. A couple of days back, he was conducting a session for DTC, Direct Tax Committee of ICI. I was the host for the session, and it was very surprising to see slides with memes, and that brought a smile on my face, otherwise a stressful day. So, if a notice is issued from a jurisdictional assessing officer, if 148 is issued from JAO as they are called, don't, I don't know whether you will consider replying or not, but at least this case law, if you're not able to remember this case law name, just remember Ram Naam Satya Hai. It resembles that. Am I right? Ram Narayan Shah, Ram Naam Satya Hai. Bad in law. The law has not visualized concurrent jurisdiction. Courts have held, I mean, maybe down the line, view may so be taken that section provides that anybody can issue. Where is the mandate? It's only the faceless assessing office. If this is the interpretation, what's the point of having faceless authority? It is rendered redundant. Yes, members? So these are only having purposes. We have not just one ruling, Ram Narayan Shah. We also have most authoritative ruling in the case of Hexaware Technologies, Bombay High Court. The Ram Narayan is from Guwahati. We also have Andhra Pradesh High Court. This was the first on the file. Am I right, sir? Andhra Pradesh High Court. Ravindra Reddy. It was the first on the file. While there is a case which is against assessee, this is from Kolkata High Court. That is against assessee. But that ruling has been considered by Ram Narayan Shah. Ram Narayan Shah ruling is just 1 month old. 25/2020. Just 1 month old. So what was held in that Kolkata ruling is, what is the prejudice caused to the assessee? Whether it is issued by faceless officer, whether it is issued by jurisdictional assessing officer, you get a notice to reply, you get a show cause opportunity, you are show caused why it should not be initiated, you have replied and they have passed an order. Order in the sense to take up your case for scrutiny, reassessment. So what is the prejudice that is caused? That is when I appreciated the beauty of the ruling in the case of Hexaware, wherein it was stated that law has given the path, law has told that certain things have to be carried on in a certain manner. And if it is not so done, that itself is a prejudice caused to the assessee. Hope members are able to appreciate. So though I got all the notices, the other day I was fighting that 270 on 1C before Honorable Bangalore ITAT, stating that notices are vague. So my SSC had not filed 148, my SSC had not filed any responses before the assessing officer reassessment order was passed. My SSC did not appear before CIT in a timely manner. Penalty was also passed. So before CIT, two appeals were there. One is quantum appeal, one is penalty appeal. For various reasons, I don't know, for various reasons, I am on camera. So for various reasons, penalty traveled faster to ITT than quantum appeal. So quantum appeal remained with CIT, penalty was dismissed for non-appearance. I went to ITT. My prayer before ITT is notice is vague. The department's prayer is associate has not appeared before CIT, let him go back to CIT. The department's prayer before ITT is associate has neither appeared before assessing officer. So he is claiming that notices are vague. He is claiming that he is not shown cause the exact reason why penalty is initiated. When he has committed so many offences of not appearing before various authorities, how can he point fingers at the department is what was told by DR. That is when I would like to place a lance, thinking in hindsight on this case, not following the due procedure of law itself is a prejudice caused to the assessee. Very first notice is riddled with vagueness, bad in law. So today or tomorrow I am sure of getting relief, but anyway it is gone to CIT now. Yes members, have you come across any 148 capital A notices, 148 notices? March month, April month, you got so many. Yes, I am sure you also had reference to the jurisdictional assessing officer there. It was issued by JAO. Who knows, just like Ashish Agarwal will deal with that case law, who knows? Supreme Court may acknowledge that there is a mistake by department, but Supreme Court may also state that department cannot be rendered remediless. So they may deem that notices issued by JAO is to be deemed as FAO, Faceless Assessing Officer. Who knows? But as long as it is there, we can take benefit of these rulings. Any questions, members? Is this what you expected today, last day of Rita? Members, yet again interesting ruling. It is only, thankfully it is only for Raipur, from Raipur Tribunal. The first point summarizes the conduct of the assessee. That means there was no conduct before the assessing office. So he is neither filed 139 nor filed 148. He is neither made, similar to my assessee, neither made representation before 144, before the assessing officer. So it was an ex parte order. The CIT also was ex parte. CIT being ex parte, I have issues. The issues are listed on point number 3. CIT, though the assessee may not appear before CIT, he is obligated under section 250 subsection 4 to cause further inquiry. He is obligated under section 250 subsection 6 to ensure that the order is disposed on merits. Prem Kumar, I refer that in all my cases before ITT, ex parte cases. So on this reason alone, the matter needs to go back to respective authorities. But anyway, CIT has passed ex parte order. ITT made a very nice observation by citing section 253 subsection 1, which reads as under. And any associate aggrieved by, so the important word there is aggrieved by any of the following orders. It has got a list of orders, I presume. So how can assessee be aggrieved when he is not making representation before any of the authorities, subordinate authorities? ITT has also rightly observed what has been highlighted on the slide. As per his violation, had either adopted an evasive or lackadaisical approach before the lower authorities and not participated in assessment or appellate proceedings, to come up with a case for the first time before tribunal, and as a matter of right, he is putting forth additional evidence under Rule 29 of ITT rules, requesting the matter to be restored. What a dangerous ruling it is. So it was held that the CIT order is valid. ITT has dismissed that. There is not just one ruling, there are two rulings. Though statute has given us right under section 253(1), this aggrieved as concept was invoked. It was so held that the order is final. Let us see the fate of this appeal. This was decided on May 15th, 2024, just a 1 month old baby. 69 is my favorite section. I dealt with 69 15 days back in this very same forum. 69 has this opening phrase, it says anybody with a bare act heading states unexplained investment. The preamble of the section states where in the financial year immediately preceding the assessment year, okay, the assessee has made investments. Very important phrase is assessee had made investments. We had deliberated on this during my session. One more case in support of what we had discussed in the past. This is from Bombay High Court. The assessee is a housewife. Her name has been planted in the deed for emotional reasons, customs where we buy property together. We are always together, better half as they are called. So assessee's name was there because she's just a housewife, namesake. It is there in the deed. While the consideration was paid by the husband on record. So because assessee's name featured, PAN number, some reporting, SFT, parity is not there with income returned and property purchased. Notice was sent under section 148 capital A, clause B, which is the show cause notice before initiating reassessment. In that, as a reply to that, assessee has diligently replied, stating, giving all possible proof that it is husband who has made the investment. So section requires, 69 requires, though it is not forthcoming from the ruling that it is section 69 and this phrase, but assessee has successfully discharged that it is not she who has made the investment. If any explanation is to be offered, it is the husband. Despite that, assessing officer went on to pass 148 capital A, B, and also issued one more letter as attachment. What is that? 148. So that is when the assessee directly, instead of facing CIT, stay of demand, ITT, directly approached High Court. High Court held that who has to explain? The person who has made the investment. That is a jurisdictional fact required to invoke section 69. When it is absent, High Court just dismissed it. So many assessees have purchased property in the recent past, at least this wife-husband combination. Assessees going to UAE purchasing property, last class also we discussed. So this ruling again will come to the rescue. Mutuality is a big topic. Sukhawandra is comparatively old. I do not know if I have to deal with it. I am on slide 21. Unlike last time I had 140 slides. Today I have only 40 slides. So I have improved. This is what revisit is all about. So wish this was Income Tax Act had a few more sections. Wish I had a few more opportunities to come here. Any questions so far, members? Feel free. Till what time do I need to continue? Time is still there. So I can also open that previous PPT. So I started at 2:40. I have time till 4 o'clock. Because I started late, I'll take 10 more minutes. 4:10. Not 4:20. 4:10 will conclude. So I have exactly 1 hour and 20 more slides. I think it's manageable. What is it? No, I may go on till 4:10. At any point of time, if you want, you can always. The door is always open. This is the place where I came as a orientation and GMC student. I have done my orientation GMCs in this very same hall. And my first class as orientation GMC's facilitator was also in the same room. It was very nice to come back, revisiting multiple times. So the one liberty I give in my orientation GMC's class is, door is always open. I may go on and on, door is always open. Yes, members, Sukhawandra Club, very nice ruling. Before we take a deep plunge into this ruling, there is this Kanpur Club, which was the first ruling on the file on principle of mutuality. There are many rulings. There is Canara Bank, there is anyway, principle of mutuality is an old concept, but a couple of things noteworthy here is Kanpur Club apparently is a residential welfare management club. So they had a list of issues before Supreme Court for the first time. The grouping was done, Group A to Group E. Group A had to do with a case where a club was rendering services to members in terms of serving food, and club had earned surplus. The question was whether it is taxable. Club and members, including guests. So that is Group A. Then Group B was serving alcohol. Group C was maybe letting out rooms on rent. Group D was maybe anything and everything with members. So Group E in Kanpur Club was interest income earned by the club by depositing that money with banks. Either it could be a bank who is a member with the club, or it could be third party, totally independent. For various reasons, Supreme Court clubbed all the groups, Group A to E, rendered a decision in Kanpur Club. For strange reasons, Group E cases, that is interest income, was set aside. Set aside in the sense that it was taken up independently. The Supreme Court noted, it is a very small ruling, 1 para or 2 para. Supreme Court noted that anyway principle of mutuality is granted by High Court. This interest income is also covered by that favorable ruling. So this was the ruling of Kanpur Club. I did not have citation, apologies for that. Then came Bangalore Club, recent past, I do not know which year again. Bangalore Club held that interest income from a corporate member of the club, coincidentally, whatever bank it may be. They defied the ruling of Kanpur Club by stating that it is to be taxed. There is no, the principle of mutuality is not there. 1, 2, 3 points are there. This is a test of principle of mutuality. We all know that. Our focus is only on dispute between Kanpur Club and Bangalore Club. Kanpur was the first, Bangalore came next. The argument was placed by Arvind Athar sir. It's a treat to watch Arvind sir on the forum. In fact, he has taken a trouble of recording all his virtual hearings and putting it on his YouTube channel. It's a very nice thing to watch. So the contentions that were put forth is the decision in Bangalore Club is not binding precedent. Why? Because it is not referred to Kanpur Club. Bangalore Club has not referred to Kanpur Club. So the judicial discipline has not been followed by the court. When there is already a ruling, when it is sought to be distinguished, either make it third member, larger bench, do whatever it is, but not this way. And the Bangalore Club had failed to take notice of the fact that, okay, I am earning interest from third parties, but that interest is used for the benefit of members. So instead of, income tax is on source, not on application. So a salaried person who comes to me says that, so although my salary is spent, I do not want to pay taxes. No, tax is not on salary. Application tax is on source. Anyway, this argument, the third argument is matter needs to be referred to larger bench because they suspected foul play that it may be against assessee, so larger bench. And that prejudice was, anyway, sole intention was to, the prudence was the sole intent of depositing money in the bank account. Prudence is also not tested. Prudence may be accounting concept, not income tax concept. The nice ruling is, yes, Kanpur Club is there, yes, Kanpur Club is in favor of assessee, but it is only ratio decidendi, which is to be considered as a precedent, a binding precedent, and not obiter. What a nice play with words. Ratio decidendi, we all know what it is. The main crux of the ruling, the reasoning behind the ruling, the main issue that was there before the court. And obiter is, I may have said many things in my session today, which I may not mean, which may not be factually correct, which is just a casual play with words. So what is important is ratio decidendi, and the Supreme Court in the case of Kanpur Club has not dwelled deep, like in the case of Bangalore Club, on the issue of taxation of interest. So it was so held that Bangalore Club is detailed. I would like to follow Bangalore Club. And last but one point is also important. The principle of mutuality applies till the stage of deposit of funds, and it would lose its application once the funds are deposited to the FD, because FD can be done, the banker can do anything with the FD. So the nexus between the club and the member is lost. Anyway, last one, mode of application of surplus generated has no bearing on the satisfaction of triple test of neutrality. Not neutrality, mutuality. Yes, members, so far any questions? I'm more than happy. purchase of property for cash, 1/6/2015 is when section 269 SS was amended to insert in the explanation specified sum. Explanation, not just explanation, everywhere. Specified sum was planted in addition to loans and advances. Specified sum has been defined in the last para to mean any sum of money receivable. Very important to read and reread multiple times to be read, because if not for these case laws from Chennai and Hyderabad, I may not have better appreciated this. I don't know if these rulings will be overturned. But at the end of the day, Chennai ITAT and Hyderabad ITAT have held that if you are paying cash for purchase of property as an advance, agreement to sell is there as an advance, you are paying cash, that is violation of 269 SS, it seems. If you are paying cash before the sub-registrar, there is no AOS, there is no agreement to sell, there is no advance at all. Straight purchase of property, paying cash, I thought it is a violation until I came across this case law. So the beauty of advocacy, the persuasive skills, the art of advocacy of the councils is the first ruling one, which was the first one. Chennai was the first one, has to be appreciated. Before sub-registrar, because sub-registrar is a supreme authority. Before him, if you are exchanging the cash, no violation. Maybe I have still not understood the definition of specified sum. Let's read it all once again. Specified means any sum of money receivable, whether as advance or otherwise. So advance or otherwise. So advance, I know that it is still adverse pursuant to this ruling. Otherwise, I thought it includes during the purchase. So anyway, advance or otherwise in relation to transfer of immovable property, whether or not transfer takes place. So anyway, I have still not been able to understand, but we have the benefit of these rulings as of today.
269 is okay, here it's not penalty. 269 SK is applicable.
Beautiful, sir. That is there. That is there. But you have liberty of 1st June 2015 till 1st April 2017. That is when section 269 ST had come into play. But at least, imagine for a sake that this penalty has been pressed against your assessee by the assessing officer 2 years before assessing officer from the date of transaction, 2 years before CIP, 2 years before ITAT. ITAT, you take this plea, let it go back to let them follow the right path. Temporary relief is there. Stay of demand, unlike indirect taxes, I do not do indirect taxes. I don't do my GST. I presume there is this concept of free deposit. Just yesterday, Karnataka State CA Association has filed a representation on free deposit based on what I read on WhatsApp. Free deposit in GST era. Income tax. I'm aware of the fact that few people among the audience may be from department. I was told the department representatives are part of it. It is being made compulsory. But despite that, a few orders are high-pitched. Associates, they often tell me that even if I sell all my properties, whether to believe them or not, I don't know, but demand is high. Demand is on the higher side. 20%. Most CAs or maybe most professionals are of the opinion that, okay, pay 20% and come. You may be required to pay 20%. So, out of 100 cases that we have represented, we find only in 1 or 2 cases where we are weak on merits, we suggest client to pay 20% because otherwise it's a burden which they cannot bear. In all cases, we file a stay application before assessing officer. 100 out of 100 cases, stay application. The stay applications being considered by assessing officer in the spirit of Circular 1914, 1914, 1993, which requires it to be disposed in 2 weeks. 2 weeks. Most officers do not do that. The other day, sir saw me filing multiple stay applications at the department, Cormanga. Sachin sir. Yes. So, 60% of the applications are not attended. As long as they are not attended, they cannot press recovery measures against me, they cannot initiate any coercive measures against me. So 60% cases, just by filing a simple stay application, I am getting a stay. Remaining cases, assessing officers are diligent, they do call me, why you filed the stay application. I will grant the stay application only when you pay 20%. So I play around with the calls. Yes, sir, we will try to convince client. It is not me who is going to pay, client has to pay, we will try to convince. Time passes by, 2-3 times they will call and they threaten us with a rejection order. I am going to pass an order, do whatever you want. So they do pass orders. While I file a detailed stay application on many grounds, one is high pitched addition, anything up 2 times the returned income is high pitched addition. Anything without considering the documents on record is also high pitched addition. I filed based on Supreme Court ruling in the case of Dunlop. I raised this contention on 3 things. Dunlop had to do with 3 things for granting of stay. One is balance of convenience. Balance of convenience. Department recovering 20% from me. ಎಷ್ಟು ಉದ್ಧಾರ ಆಗ್ತಾರೆ and I paying 20%. I will not be able to restart my life. 20% of 2 crores, 40 lakhs, how assessors will pay, for example. So the benefit cost to the department will be far lesser than the damage cost to the assessee. So balance of convenience. I raise that ground. I cite the financial difficulty. I cite the merits of the case, prima facie merits, if any. All these grounds are running, stay application running into at least 5 pages, 6 pages, but one para order by assessing officer. You deposit 20%, then I will grant stay. This is what it is. I can show hundreds of stay applications orders. Similar order was passed in this case. This is not landmark assessed. I am just picking on this because it's a recent one. Income tax, there is no precondition. Circular 1914 also visualizes a situation where they can collect more than 20%. Also visualize a situation where they can collect nothing. It can be less than 20%. So of the number which I dealt, 100 stay applications filed, 60 not disposed, 40 travels to what? Travels to Principal Commissioner of Income Tax, 40 because I have to, otherwise my bank account will get attached. So before the Principal Commissioner, they will be very kind. Maybe assessing officer not passing stay orders because administrative thing, they have their own issues, targets. PCITs have been very kind. The stay ranging from, we have been getting 100% stay. There are instances where PCIT says, I will not pass any order, I will just ask you to furnish bank account statement and keep this file aside. Very kind. Because they know what assessing is all about. There have been instances where they said installments, there have been instances 5%, 10%. PCITs have been kind. Instances where without hearing at all, both assessing officer and PCIT has dismissed my stay. That is when I can still explore. Though they are concurrent jurisdictions, PCIT as well as CIT appeals, because my appeal is before CIT. Can I file a stay application before CIT? Answer is yes. CITs do have powers to entertain stay application. So how do I file before CIT if it is a faceless? There is this new notice called as enablement communication. The moment you file appeal, there is this, just to open the window, they issue a notice with just 2 words, communication window is enabled 3 words. As a reply to that, I will dump my stay application. Or before PCIT, I request for early hearing of case because I cannot pay the demand. Before ITAT, you can file stay application only if it is a case of ITAT. So at least this ruling can be cited. If you had an order with a huge demand, this ruling can be cited. Do bear in mind that it's not a precondition.
ITAT also needs deposit.
ITD can file appeal against quantum, but if you want to file stay application, 20% is mandate. May I please proceed, members? This is a big Ashish Agarwal. How many of you are aware of Ashish Agarwal case? Take a very small, little bit of time to deal with what is Ashish Agarwal. As we all know that 2 reassessment regimes. The cutoff date was 1/4/2021. Yes? Cutoff date was 1/4/2021. Prior to that, old regime. After that, new regime. Entire law has been recast. Lot of powers given to the assessee, lot of powers to the department, whatnot. But 1st April 2021, we were still facing COVID. So taxation and other laws, Amendment Act, Relaxation Act as it is called, TOLA. By using TOLA, they extended the due date, which was expiring on 31st March 2021. That was the last day for old regime. They extended it by 3 months to issue 148 notices. Because of COVID, they were not able to do it. 3 months extended. Initially 1 month and then 2 more months. The extension was done by way of a notification. Under which act? The TOLA, Taxation and Other Laws Act, Relaxation Act. Extension was done by way of notification. That too, members, that too when on 1/4/2021 new law has come into play. So there was a time from 1st April 2021 till 30th of June 2021 when both the laws were in operation. How can it so happen? Who are the lawmakers? By way of notification, can we play with provisions of the law, extend due date? Many high courts were in favor of SSC, but anyway, Supreme Court, considering the fact that 90,000 cases were initiated for reassessment between this period, considering the fact that 9,000 appeals were pending either before Supreme Court or before high courts various levels, considering the fact that department cannot be rendered remediless, what Supreme Court did is they deemed notice issued under old regime to be notices issued under new regime. But thankfully, the third or fourth point, Apex Court in Ashish Agarwal categorically has held that all defences, including the limitation available under the new provision, including amended section 149, shall be available to the assessee. Thankfully. So my focus is on all the assessments done for 13-14 and 14-15. 13-14 due date expired 6 years because old act 6 years. Due date expired on 31st March 2020. COVID 1 year extension 2021. Can it extend beyond that? Supreme Court had done that for 3 months. 14-15 due date expired on 31st March 2021. 6 years. So for 2 years due date expired under the old regime on 31st March 2021. Coincidentally, for these 2 years, the notices that were issued after that, when new regime had come into play, in all these cases for these assessment years members, any and every appeal for 13-14 and 14-15, as of today, it is bad in law. Thanks to this ruling. The basis is the first proviso to section 148, first proviso to section 149, subsection 1, clause A. It is worth reading it. (149), the amended provision, subsection 1 is dealing with the time limit for issue of notices. First proviso reads as under: provided that no notice under section 148 shall be issued at any time in a case for 11th assessment year beginning on or before 1/4/2021, if, this is very important members, if a notice under section 148 and few more sections could not have been issued at the time on account of being beyond time limit specified under the erstwhile provision. So if you cannot do anything under the old act, you can also not do it under the new act. This is the sum and substance of first proviso. For an example, we all know that reassessment under section 148, the amended section 149 can be done for 10 years. Yes. So what is the maximum we can travel back? When the law was introduced, 1st April 2021, what is the maximum we could have traveled back? I guess assessment year 10-11, or maybe let's take 11-12. On 31st March 2021, when old regime was there, I couldn't have done reassessment for 10-11 or 11-12 because 6 years had expired. Just because 10 years has been given under the new act, new registration reassessment regime, can I go back to that year? No, because what was not possible under the old act can also not be done under new act. The first proviso. So that was appreciated, and as of today, any appeal for assessment year 13-14 and 14-15 done during this period, 1st April 2021 onwards, it's bad in law. It is far better for me to fight cases on this than on the merits of the case. Am I right in saying this, members? Again, post Ashish Agarwal, because post Ashish Agarwal, I am looking at 90,000 cases. This is not my number, this is the number given by Supreme Court. It stated that 90,000 appeals, the department cannot be rendered remediless. So few cases here and there if you can represent. As we all know, section 151, any reassessment, there has to be blessing from the superior authorities, approval has to be taken. I'll not deal with all the which member, which jurisdiction officer, whether it has to PCIT. If it is within 3 years, certain set of authorities, beyond 3 years, PCCIT. So it is there in section 151. There have been instances where notices are issued post Ashish Agarwal, during the period of Ashish Agarwal, where if it is beyond 3 years, they have been invoking erstwhile 151. What has been held here and few more case laws is erstwhile 151 never existed after 1/4/2021. Though 148 under old regime is deemed as 148 under new regime, they still have to follow the amended 151 and permission has to be obtained from the right authority. If it is not so very easy for me to win the case on merits, on legal points, then on merits. So there have been instances, assessment is 16, 17, 17, 18, other years where approval is erroneously obtained. Same, few more case laws. I have highlighted only one point there, points that proviso to section 151. What is proviso to section 151? Proviso to section 151 referred to fifth proviso to section 149 subsection 1, which stated that time limit between the date on which you got 148 notice or maybe the stay from the court till the time limit the stay was vacated, that is not counted for limitation. So if due to this benefit, 3-year limit is crossed, maybe higher authorities is required. Anyway, on January 2026, I had an opportunity to deliberate on appeals before the first appellate authority. That is when I had referred to this particular aspect on a limited basis. Today we have a ruling in support of what we had discussed in the past. Section 282 is dealing with service of notice. I have highlighted only 2 aspects. Subsection 1 clause C is dealing with service of notice in the form of electronic record, Information Technology Act. This is not being discussed now. Clause D is dealing with the transmission of documents as per the rules made by the board. Rule 127, I suppose. 128 is on FTC. 127 is dealing with how a notice can be served to the assessee electronically. Look at this, members. Look at this. Today, if a client poses a question to me as to which ID I will get notices, I do not have answers. I have 4 or 5 sources from where I can pick the notice. And it's not as per hierarchy. I cannot confidently say. The first source is email address available in the, I'm reading B subclause 1. Email address available in the income tax return furnished by the addressee to which the communication relates to. For if it is for 1718 return, they go and see the email ID. Often it so happens that the manager, corporate manager in the company, tax manager has left the company. But still they can pick on that, serve notices, and it's a valid service because you provided that email ID. The second source is email address available in the last income tax return. Second source. Third source is in the case of addressing being a company, email address as per the MCA. Fourth source is email address made available on the income tax portal, I suppose. Income tax portal in the My Profile. Anyway, this is how the notice has to be served. But instances where department just puts up the notice on the income tax portal e-proceedings. For 234E cases, we used to have this argument saying that I never got the notice. Notice is just lying there in the traces portal. Instances even in the present case where department, I think in the CIT exemption instances, 2 cases before High Court, 1 before tribunal, where notices were not served. The department took a plea that I might as well put it on the website and it's a proper service. Courts have come to the rescue of assessing. No, that is not what section 282 meant. That is not what section rule 127 meant. Service means proper through email it has to be done or through post. The reason why I dealt with this is all pervasive. Most of the assessees may face this. All cases are all pervasive. Rule 11 UA dealing with safe harbor, the 10% tolerance limit was brought in play from September 25, 2023. If the NAV, if the fair market value of the share for the angel tax purposes is within the 10% tolerance limit, no need of addition. It has been so held that it is curative in nature. It is to remove the it is remedial in nature, so retrospective effect can be given, very similar to section 50C. I have 10 more slides. Members, you all may be aware, we had a luxury of Karnataka High Court ruling, employee ESIPF. I have so many cases on ESIPF. Unfortunate. Offences under some other law being punished in income tax, permanent disallowance. Till the recent past, we had we had benefit of yes, sir. As the boss says, we will now break for 10 minutes tea and then we will continue.
We'll come back for after tea.
Sure, sir. 10 minutes, sir?
20 minutes.
20 minutes, yes. Thank you, members. It is correct for us to think that this is only dealing with ESIPF. But I'll cite an example of ESIPF in my own case. Belated remittance of employer's contribution, we know that 43B is there within due date 139(1). Belated remittance of employee's contribution, we had a benefit of jurisdictional high court ruling. We were lucky enough to get a couple of orders in our favor from CIT, lucky enough to get most of the orders from ITAT, favorable. Post which there was a Supreme Court ruling in the case of Checkmate, November 2022. It is so unfortunate that even to this date, the Supreme Court ruling has been cited to reverse the ruling which was otherwise in favor of SSC. Ruling by whom? Ruling by ITAT. ITAT at that point of time, in my case, May 2022, considered the Karnataka High Court ruling, passed an order in favor of SSC because High Court binding on lower authorities. Then came November 2022 Supreme Court. Department then files a miscellaneous application petition before ITAT stating that the ruling is against a subsequent ruling of Supreme Court. Bangalore ITAT, almost all cases are 100% of the cases are against SSC. So the favorable ruling which I got, client paid the fees as well. Then client got a notice that the miscellaneous application petition is listed for hearing. That is when I break the news to the client that there is adverse Supreme Court ruling. They do not understand the complexity which is involved. But unfortunate, all rulings of Bangalore ITAT are against SSC, stating that the earlier order was modified, checkmate ruling was followed, adverse order was passed. This ruling appears to be very late and very little. Thankfully, Mumbai ITAT has passed an order by following yet again a recent ruling of Supreme Court in the case of Reliance Telecom, wherein it has been held that subsequent ruling of higher authorities, subsequent ruling of subsequent benches cannot be considered as erroneous. The earlier order cannot be considered as erroneous. So this was a ruling. So even to this date, thankfully, the favorable orders from CIT, not just related to ESIPF, any other matter which has been subsequently overruled by Supreme Court. If they want to initiate if they want to initiate rectification proceedings to undo the relief that has been granted to me, I can always cite this ruling. In the case of ANI Integrated Services, very recent, I don't know why it is November 2022 is checkmate. Now we are getting the miscellaneous application related orders. Nonetheless, we have a benefit of this. With respect to alternative invocation of section 68 to 69, in the previous class we had referred to Manoj Agarwal special bench, we had referred to Namdev Arora High Court to state that department has this free hand to move the addition from either 68 to other sections. In this case, a very interesting case, facts, first time in my session today, I am referring to facts of the case. Before I do that, I would like to acknowledge the presence of Kota sir. the next speaker for today is the program coordinator, the person who is responsible for this show. Thank you for the opportunity, sir. Thank you for gracing the presence. You let me know when I have to stop, I'll stop.
No,
No.
5-10 minutes.
Sure, sir. Sure.
They are okay, you can continue for some more time.
No, with this case, I will stop, sir.
No problem.
Members, facts involved in this case, the SSC presumably involved in bullion trading had clocked a turnover of 170 crores. Out of that, 100 crores turnover was pertaining to November 2016 demonetization month. Look at the ratio. Total 160, 100 is pertaining to demonetization. Department accepted 70, department accepted 30, 70 was disputed before the Honorable Court. ITAT. The ITAT has two members, accountant member and a judicial member. Accountant member was of the opinion that section 68 cannot be triggered because SSC has filed books of accounts. SSC had filed quantitative details. SSC has already considered this income under section 28. SSC has filed quantitative details, tax audit report, and there is no whisper either from the assessing officer or from the CIT appeals with respect to any adverse inferences with respect to the books of accounts and other documents on merits. So the accountant member was of the opinion that 68 is not applicable. Judicial member for various reasons felt that yes, 68 is not applicable but examine section 69 or this addition has to be upheld under section 69. That is when, because of the conflicting views, the matter was referred to the president of the ITAT. President appointed a third member. Third member has got a very limited scope, members. Third member has to either agree with appointed member or judicial member. Third member stated that at the second appellate forum, for the first time, department cannot move the addition from 68 to 69. Let's remember the scope before third member is very limited, and this was the view from the Honorable Tribunal that for the first time it cannot be shifted from one section to another section. Let's also remember that section 68 is for credits appearing in the books of accounts. 69 is for investment made. It was also so held that section 69 is not applicable for cash deposits. Very beautiful ruling, 3-member bench. Abhisar is comparatively old, so I will not deal with it. When we have speakers like Kota Srinivas sir, why require Siddesh on the stage? Anyway, it was a pleasure. I will undertake to share this particular PPT with the learned audience. Thank you all for patient listening. With this, I call upon Chandraprakash sir.
Thank you, sir. I request our program director and central council member CA Kota Srinivas to on the line and speak on, give a concluding remarks on the entire program.
Good evening, members. I hope you had a fantastic session of 84 hours. So I'm just going through the feedbacks. How many of you have attended all the modules? Most of you, I suppose, here, sitting here. Okay. So instead of reading that, I would like to invite you people to come and give your feedback from the dais, so that it will help the organizers to look through what are all the deficiencies, if any, or improvements that has to be done, or some structural changes required as such. Because we are seeing, as I said earlier also, we are expecting almost 150 to 200 members, because it's very difficult for us to sit and read entire income tax act, even 84 hours, even 100 hours if you give also, it's not possible. So it's a great opportunity. It was a great opportunity for all of you. the members to come here and at least know something. It's not that we will communicate entire 298 sections of income tax, but at least we will take you through that income tax laws provisions. I'd just like to invite a couple of you to come and give your valuable feedback. Always at the receiving end. Should come and deliver also now. Yes. Anybody who has done GMCS course? Because all of us have not done. I have not done GMCS and all. I think these youngsters would have done, so they will not have any stage fears. Here comes.
Respected Sri Kotha sir and our Bangalore branch committee and all our dear friends. Really very thankful to our Bangalore branch to having conducting this type of session which run through all the provisions of the. See, we qualified like 21 years back. Frankly, I'm telling you, initially I started this only to cover up the CP hours or something, but the days goes on, we developed a lot of interest, because this is the where we can unlearn and relearn a lot of things. That's what, because we have to unlearn a lot of things as the time goes by and relearn a lot of things. That's what my experience was. That's one. It's a really wonderful experience. Getting in touch with a lot of seniors, juniors, and all those things. So I'm really thankful to our Bangalore branch and also Kotha sir being the initiator for all these things. Thank you.
Yeah, all of you should give, otherwise I will not wind up this session. Still we have time, 1 hour is there. Or we will send the mic to itself there. Hand mic is if everyone.
Good afternoon.
Good afternoon.
Respected sir, all protocols observed. It was really a good experience to be here and to learn. And it took us to those old days where we were doing our articleship, sitting for hours and hours, listening to all the teachings and all those things. Definitely a great thing from Bangalore branch, the nice initiative. One of the suggestion, if I could give, it was very difficult, especially for ladies, to be here till 8:30 and to travel in the Bangalore traffic, taking back home 1.5 hours to 2 hours. So, but still we made it. But I would like to see more lady members to come forward. And second suggestion will be keeping it continuously 3 days out of office, like Thursday, Friday, Saturday, and 6 weeks. Yes, we took it as a challenge, and a couple of us remained here for 6 weeks, all the days. But it was a challenge, and I would say maybe we could look at splitting it. So those are the two suggestions I would like to put it forward for consideration. But definitely a wonderful initiative from Bangalore branch, especially from Kotha sir. Thank you.
Yes, next. Yeah, it's better.
Sir, extremely
At least
thankful.
I will read all the feedbacks, that's it.
Yeah, actually I am not CA by profession.
Okay.
I am engineer, and I was trying to develop some softwares for taxation and things like that. So somebody suggested me that there is some session that is going on in ICI, so if you can join it will be very helpful. And I realized by coming here that just reading tax acts doesn't help, but by having an interaction and even having the presentations here really helps a lot. And going forward, I feel it is really a great asset for me.
Good evening. It was very useful from the practical point of view, and it also throws light on some of the steps which in the normal practice which you are doing which we can do in a better way or which we can do in a different way in litigation matters especially. And some of the things which some stand we are taking in the ITR return filing or advising the client and all, we could take a new approach. That was the major takeaway for me from these sessions. Thank you.
Sir, thank you very much, sir, for organizing this revision of income tax. Sir. When we are attending here in this room, sir, we are remembering our GVCS classes. Really, we are enjoyed every day, sir. I am attending all the modules, sir. And especially thank you because you are the person behind this organizing this ITAT, sir. Very much thankful, sir. And also my suggestion is, sir, please in GST also, please organize this type of
because I think it may require after a long time the basics of GST. We will do that.
Thank you, sir.
I did not attend all the modules. I just attended.
One second. Ms. Padma is here. Yeah.
So I just attended 2 of the modules. The insights were very good, and the thought-provoking ideas were appreciable. Very few sessions were very basic. I felt that way, that we should avoid in future, because I need not know what is 45 reading, or I need not know what is 55 reading, I mean verbatim. It went on like that. For me, I felt that. So probably it was a miscommunication to the speaker that they were not, they were just going by the section reading. I don't recollect the speaker name now. I have written in the feedback, you can just take a look at it. That is the only suggestion.
What is the section reading? I don't think so.
So one of the capital gain session, I don't recollect the speaker. It was a very basic session, I felt. It can be little more thought provoking.
Okay.
So not everyone was like that. Only one session I felt like that out of the 2 modules. So if that can be taken care, it will be helpful.
Just adding to that, section 234 also, sir, interest sections. That is also, compared to the faceless, I felt that the 234 or 234A, it is interest related, where now everything is taken by system care. So it is almost, they took 4 hours for that topic.
4 hours was
I felt
234A
just
to D was not.
234 F2, 234 G. Interest, ABC.
Interest is 4 hours.
Was for 4 hours. Last 3 hours.
Not 4 hours.
232 6.
232 6.
232 6.
Arjun took that one.
Yeah.
Arjun, that is interest. To the
Interest only, sir.
Interest
only, sir.
And
interest on refunds and interest.
Yeah, nothing you can do. No, it's all automated.
So we don't have interest or interest.
No, sir, just a suggestion, sir.
He was also new. And
Yeah, he was new, ma'am. He was maybe first time or second time.
No, maybe for us also.
234A, it is just if you read the section that is different, but you have to go in depth and with the examples I told you to do it. Maybe you have done the effort you would have put.
That was a bit difficult for him.
He is very good, sir, but only thing, no? Basic calculation I was.
So one more suggestion from my end is, if we can make it online as well. For example,
Madam, online it was not allowed. Otherwise, I would have been 500
no,
members.
whoever comes here, they can get
No,
the
it was
structure.
not allowed, permitted. That was the main problem for us.
No, but actually-
Otherwise, we wanted to do from SARC, we wanted to do from 3 branches, that is Kadapa, Anantapur and Kurnool. We would have expected 500 members.
Yeah.
But they said CP guidelines, no online. So we shifted to physical.
But knowledge-wise, even if I was not able to come for a couple of modules, I could have at least attended on.
No, that's what. It was not allowed. That's why one problem came for us. Otherwise, many people asked, many members asked whether it can be virtual.
No, but can't you at least going forward, can't you make the CPA, 50% online?
Now I have to go and talk to
physical?
them.
No. We don't want to make physical. No. Without CP also you could have attended.
Yes, sir.
I said I don't want CP for members. No CP, just allow that. That also they said it's not possible. Now I have to go and talk to them.
Yeah. I mean, we can do for everything, no companies,
Yeah.
FEMA,
It's not that CP only is required.
Yeah, that's right.
Good evening, sir.
Good evening.
I have attended 3 modules, but it was very nice. And
So you missed the 3 modules. You should have said that you missed.
salary and head of income and these today modules. Thank you.
Okay.
Yeah, good evening, friends. I attended last 3 days session. Actually, I am not, rather all of us are not handling all the areas. So we are specializing in different areas. But I just came just to see around what's happening. So really delighted, and it was very fruitful session. And also speakers they did job.
So 5 minutes, sir. Will come back, huh?
It was nice, and we felt we are updated.
Come in.
How many new things, how to say differently also we. It's nice actually. Thank you for all that.
Good evening, friends. I am Arvind. I am specializing in GST. For me, all the sessions I attended, I got a lot of ideas, even which we had forgotten. I got to know latest amendments, and all my queries were resolved. And I got to meet I got to make lot of new friends. So lot of networking also has happened. It was a good idea. I thank Kotha sir. Thank you.
All right. Good. Thank you. How are you, Gulnari? Yeah, really good. That's it.
Good evening, sir. Actually all the sessions were knowledge enriching, no doubt about that. Except like I said that 234A. Maybe it was, we also felt bad when we came back next day to hear that there was nobody. That's a little bit on, if you take it especially on a Saturday evening, giving it to a raw hand could have been avoided, that's all. And then we can also have some on this company law, all those things. Maybe split sessions, 2 Saturdays in a month, that will be so much easier on us. Sitting after for so long, sitting 3 days a week. More than for the CP, this is much more than the CP requirement, because we basically wanted to revisit income tax. That's the reason why we attended. So that purpose was definitely served, no doubt about it. And this mandatory session also, I thought maybe if you could have one session every 2 months together, that code of ethics and standards of auditing. So we can finish the mandatory portion for whatever it is. That why every session, so at least we get 6 times in a year. Yeah. No, but I thought we had only code of ethics, I think, May, I think 26th or something. So 2 together, we can just finish it. So that would also help. All acts or whatever we need to revisit, if we can do it in shorter modules, I'm sure, definitely we need it, and that online, even if it is not for CP, I think we should seriously consider it. Because we all need to update, it's more than the CP or whatever it is. We want to update.
See, online, if you want, every committees are doing, like our DTC committee, every Thursday we are having 4 to 6 or 3 to 5, depending on the availability. Every week we do, that's unstructured CP.
Yeah.
Lot of topics, every Thursday if you go to the website.
No, topics is alright, like this I'm saying, sessions. Because I remember during COVID times, this Vijayawada branch had one on Companies Act for private limited companies. 4 or 5 weeks together for some 4 to 7 or something like that. So something like that we can also take. So that we are updated on everything. Basically that's what it is. Thank you, sir. Thank you so much.
Good evening, everybody. First and foremost, I will thank for each coordinator and the speakers who have come and given their time for us. And my one suggestion is to at least only Saturdays if they conduct, it would be great help to us.
You have written something else, that also is done, huh?
Thank you, sir.
That is not, you have written that.
The shop floor section would have done well for PR. The structure survey, how to handle it. This session, if it was for that 3 hours, it would have been very useful. Because he gave a lot of things on practically how to handle it.
Sir, one more thing, sir. All the speakers are very good, sir. And one more thing is, we read in the books now, we can't understand.
Yeah.
That all the faculties are in the practice. They are experiencing out of the books also. Some of the points, how we have out in practicing the income tax. They are telling out of the books also, the practical. So it is very important.
Fourth module, fifth module, I think. Fifth, sir. So I think about feedbacks and overall it is good feedback, except a few people that have said average or something like that. Most of the speakers we have got a good feedback. And of course you have your own little bit concerns. I am not denying that, but we as organizers we have a lot of concerns. So like to get 41 speakers is not a joke. Means it's not easy to get 41, 42 speakers as such. I've been trying and getting so many speakers, but suddenly they will also have some other things, and at the last minute they will back out. Or one week before or 10 days before, sometimes they back out. In fact, I think all of you heard my TDS presentation. Was it good? Good, huh? Okay. Last time Rita was done, the speaker said before 4 days that I cannot speak. The reason was he had some throat problem. It's not that he will not speak. I think what TDS means if you are in Bangalore, we usually call, we used to call D.R. Venkateswar, the late D.R. Venkateswar. He was a speaker last Rita when we did Rita. For TDS he was the speaker. He had some throat problem. This was on Thursday. Monday he called me and said, Srinivas, I cannot speak. Where I will find the speaker within 3-4 days. And that was not physical, it was virtual at that time, 3 years back. 3 days I was sitting in the house only because it's all lockdown now. I prepared everything and I started presenting on TDS. So like that, there will be a lot of issues sometimes. And today also brain trust, maybe I don't know how many people we tried. But lastly I requested Siddesh to come back, and usually I don't want to repeat the speakers. I'll see as far as possible we will get a new speaker, except Kota Srinivas will speak for 2 times. Otherwise nobody will speak. We say that I'll try to get a new perspective, new experiences. But today we called so many people that they were not available. Even he was not available actually. He was supposed to go out of Bangalore. On my request, he said, okay, because you are telling, I'll come here up to 4:30. So I just, 3 days back only we discussed. Of course, he has that case laws and all readily available. It's not that he has to sit and prepare. So he accepted our invitation. Thank you, Siddesh, for accepting this and coming here. And most of you have given average, excellent, good and all. That's few people would have just ticked and few people would have given some comments also. You said that youngsters you should avoid. No, some of them. I'm not saying that.
Limit their time and say.
Yeah.
Maybe too big, so it's difficult.
No, actually he said, whatever you're talking about one example, he said, how can I do, he said, uncle, how can I do for 3 hours, so much little sections you have given, I cannot prepare for 3 hours, he only said. Then I said, you add some more sections and do it. So that's how I told him to do it, and I also told him to bring so much of examples, maybe you would have done that. So that's how it went beyond 3 hours. New speakers have to be given. We cannot get all experienced speakers out of 41. Few we will also give new speakers. In fact, you said Prashant, you said Prashant should be given 3 hours. When I was the chairman, I gave him the opportunity to speak for the first time. I don't remember, he remembers. Sir, I'll start my Today he is one of the national speaker. So like that, until unless somebody has been given an opportunity, and this is a platform, this is our own branch with 50, 60 people, we should give. If any one of you are interested, I will give you also an opportunity. Every one of us have come like that. Even Siddesh also would have come from the branch only. So until unless we give an opportunity, they will not come.
We have to give, but.
That's all. Yeah, I understood. And of course, seeing the experience of physical this thing, I also gave a thought. Certain topics can be reduced because 84 hours I feel it's not required. So certain topics can be reduced, and I can even reduce the length of this particular thing so that more and more people can come. But of course, this RITA is definitely essential once in 2 years or 3 years. We have to go back to the basics. That is very much essential. Whatever may be our experience, something may be there which we may have to, we would have not read or we would have forgotten. So it is something like rewinding our knowledge. So that will be there. Overall, everybody has given a good feedback. We are happy as organizers. And you are asking for something like GST, this thing, or other topics. I'll definitely tell the chairman to organize something on. Yes.
Income tax, advanced level also you can.
Yeah, advanced level also. Usually we used to do like basics in international taxation, 2 days program we do, and one more we do like transfer pricing basics. That also, if the purpose of international taxation, transfer pricing, and we do know, like those who don't know anything about transfer pricing, if they attend that, at least they'll get an idea of what has to be done. If they get some client, at least they know what to speak. So our intention is not to do only CP and bring some 4 speakers and go. Like when once you hear this particular, attend this thing, if you tomorrow you get a client, at least what to speak to him, what to ask him, and then maybe because you know the speakers or you know some of the people here, if required additional this thing also you can take benefit from that. So that is one of the reason. I will tell them for international taxation and also transfer pricing. If you are interested, we can have 2 days program, that is 2 full days, Friday, Saturday, we can organize. And GST also I will tell. Anything else I wanted, apart from what she wanted, that code of ethics and Indians, that will be done. FEMA I wanted.
Company said is possible.
I'll ask the managing committee member to write all those things. GST, Companies Act, FEMA. Of course, 1 day seminars we keep doing. So anytime.
For audit for cooperative society started for this 1 month.
That they have been doing, no? Audit they have been doing.
No, but it's ended up in that season. Last.
That was in okay. That's
That online accessibility.
No, online we have to discuss now because there is some.
Without CP.
No, that also they didn't allow. That's why we came here. Otherwise, we would have done that, and more people would have got benefit
Sir,
out
now
of this.
every Thursday the direct tax committee has a chairman.
That's unstructured.
Yes, sir. In that also you can, I mean, like that other committee also like this revisit of basics like that they cannot do, sir. Topic
They can do.
They can do. Same thing.
But they cannot have that much 84 hours, no, that 42 weeks they have to do, no, continuously. Because in direct taxes, what we do, 1 day international taxation, 1 day direct tax.
But even 42 days also, sir, even who are much interested, no, they will go in depth. Say for example, today section.
No, I am selecting some of the topics and I am giving
Yes,
that also. So you may get the same thing or same speakers you may get, like Prashant spoke, Chandrasekhar Shetty spoke, like that. In future also, some of the speakers who came here, they will be speaking there.
If it is like this structure, no, sir.
That will be difficult. That will be difficult in the national level. No, except central committees, others cannot do it. Even SIRC wanted to do, they couldn't do it. That was the reason. Otherwise, this could have been done across southern regions, across India. Many people would have registered and they would have got benefited.
It is very helpful, sir.
Yeah.
Entirely, so much.
As a
working professional is
And
very
in-depth,
helpful.
this one, I mean, this was an in-depth session. A very good session. And, I mean, this is what is actually knowledge enriching.
Yeah. More than real CP actually.
Yeah,
Increase the confidence levels also.
And okay, once again, thanking all of you for attending all these modules. If anybody is interested to be moderators, I think you would have attended these DTC sessions. If anybody is interested to be moderators, you can just let me know. I can recommend so that before becoming speakers, you can first act as a moderators. And subsequently, if you are interested to speak on certain topics, we will see. I can give some opportunity from the branch and then at the national level. When once we do these programs at national level, almost the attendance will be 1,000, 2,000, sometimes even 3,000 people will attend. So if you can become a moderator, that will be helpful for me also. So you can give your names and phone numbers. I will get in touch with you. Thank you once again for all this thing. Finally, formal vote of thanks CP Jain will give. Thank you.
First of all, thank you for the wonderful session, sir. Sidesh. On behalf of managing committee members of Bangalore branch of ICF, I thank all the speakers and the wonderful participants. I request CCM Kotha Srinivas sir to present a gift voucher to the speaker as a token of gratitude. Thank you one and all. We will meet for the next CP at Stardust Pier.